So good morning, ladies and gentlemen. This is me, Akshay Patil, for the concluding day of Bobble Digital Conclave 2022 in this beautiful state of Goa. So here we are on the concluding day to begin with our first session, that is use cases of account aggregator in BFSI. And we have, to throw some light on this subject, Mr. Vamsi Madhav, Chief Operating Officer, Sahamati. So please welcome Mr. Vamsi Madhav.
Thank you, thank you. Yeah, super. So, I know maybe some of you already know, I know Sitaram sir knows everything about account aggregator, but we can make this very, very customized, right? Huh. Overview. Okay, fantastic. Okay, super. So I'm here representing an organization called Sahamati. Thank you for inviting us. We are a not-for-profit organization. The purpose is to do what it takes for making this new concept called account aggregator a reality for Indian citizens, right? Now, when we speak about public good, the backstory is that 2008, the percentage of Indians who had a bank account, as most of you know, was, I think, about 15%. Now, cut to 2018, particularly in the years of 14 to 17, what was called the JAM trifecta really successfully launched and I would say concluded phase 1 of financial inclusion, which essentially is based on identity and then based on identity bank accounts being available. So you know the story, right? But the second half of the story is that although many Indians do have a bank account, access to formal financial services, starting with security through insurance, access to credit, and particularly credit at small ticket sizes, small tenures, and ultimately being able to participate in wealth management, which is like a dream. And today, I was reading a nice article by one of the VCs called Bloom. We keep speaking about India being a 1.3 billion, etc., but the entire market is 100 million. I mean, you look at all the money that's flowing around. There's $1 trillion GDP that's focused on the 100 million Indians. And phase 2 of financial inclusion really is about what can be done to make the other, about 130 million that actually can be very easily formalized, and in the last few years, a formalization of the economy is happening through GSTN, through UPI, etc. How can that segment now benefit from the digital public utilities that this country has been rolling out thanks to the efforts of everyone, right? And how can that segment start getting access to insurance, to credit, and even to the capital markets to be able to invest and earn wealth, not just earn a living. And I think the hypothesis is that the significant bottleneck is access to data, right? Now, why is that the hypothesis? This is a known story. Globally, it seems to have been acknowledged, and all of us do acknowledge, as citizens, we do see the power of identity through Aadhaar, right? In fact, we are still a little scared. So yesterday, Fahim texted me saying, can you please give me your Aadhaar number? I will give it to the reception. I said, don't worry, I'll present it myself, right? So there is still a little bit of, we tend to be very cautious about giving that. But it has become more or less a ubiquitous, token for identity. Payments, I'm not going to speak about the UPI story. We all know that. But when it still comes to being able to, I think first recognize that data is also is treasure, right? And sorry, I'm only focusing on you, but I'll start looking at others as people join in. No worries, right? Don't be under the spotlight. Data is actually a very important piece of information that I can use as a citizen. This realization, I think, is coming in now, right? Thanks to everything that's happened in the Western world and a lot of the data security and privacy kind of thinking that's been going on now. Second, From an enterprise perspective, whether it's banks, NBFCs, etc., I think there is more focus now on being able to collect data more efficiently and collect more data efficiently. There are two different parts of it. And I think the issue today, the broken part of the digital journey, this is a digital conclave, is that the most digital way of collecting data today that's prevalent seems to be a PDF upload, right? And we all know how broken that can be. So in many ways, the idea of the account aggregator as a digital public good that was conceived of in 2016 was to solve this fundamental, very simple problem, which is, as citizens, we all have bank accounts. Let's start with a very simple bank account, right? We'll expand that to other areas, and I'll speak about what is the scope of account aggregator and why that should be exciting for banks like Bank of Baroda. But let's start with a simple bank account. I have a bank account. For any financial service that I need today, be it an insurance, be it loans, be it even opening a demat account, they seek my bank account. How do I give that today? And the way I give that today is fraught with two problems. First, it's not very convenient, right? PDF upload means first I have to download a PDF, which means I have to spend time on the banking channel, I have to log in, and like one of the founders of one of the NBFCs, very big NBFCs, told me months ago, saying if we have to scale in this manner, we will stop being an NBFC and we will become a call center. I said, why? He said the amount of follow-ups we have to do, and they're fully digital. They are a digital, lender, right? But he says even for us, when it comes to the specific journey of data collection, we have to follow up. And I can understand that, because if someone has to upload a PDF, he may not be ready right then. He has to prepare the data, right? And he says it's becoming terribly cost ineffective for us. And therefore, they were one of the earliest adopters. In fact, half of the traffic today in account aggregator comes from this NBFC. It's lending card. It's not a secret, right? Extremely kicked about account aggregator right from the early days because of this reason, right? So the idea is that you solve the problem of convenience for the citizen, and therefore you solve the problem of efficiency of collection for the enterprise. That's problem one. Problem two, which is a little more abstract problem, is the problem of privacy. We all know today that if I give my bank statement to someone, it goes into a black hole. I have no idea what's happening, who's looking at it, and how it will be misused. So far, as Indians, frankly, my sense as an Indian myself, we have not been too bothered with it. But in the last few years, I think, we are becoming more aware that we better be bothered with it. Admittedly, it is a problem that the urban Indians will first realize, but you can see how things are going in India, where there is a tier 2, tier 3 educated, digitally savvy middle class who will also be worried about this problem, right? And therefore, regulations and laws are pushing everyone to recognize that data must be shared in a very secure manner. Now, how do you create security? The first pillar of security is auditability of consent. If tomorrow a consumer or a citizen raises a grievance saying that, hey, my data has been misused by someone, there has to be someone held accountable who can prove to the citizen and to the regulator that yes, this customer actually gave consent for his data, or no, this customer didn't give consent, there is no trail of it, and hence that party must be penalized. Today, that traceability doesn't exist. It is kind of a broken journey where the ombudsman will probably speak to multiple parties. So the unique architectural decision taken in India, and I'm saying it's unique because in our study of open banking globally, nowhere else has this decision been taken. And the unique architecture is a special class of regulated entities were created by RBI in 2016 through a master direction. And why is this a special class? Because what they're supposed to be doing is nothing but manage consent. In other words, the idea is that if the citizen needs an assistant, an agent who he is authorizing to say, भाई तुम देख लो जितना भी consent है for my data, I am going to depend on you. You are my consent manager. The account aggregator is actually the word account aggregator sometimes misleads. I prefer to use the word consent manager. That's a more accurate description of what this entity is supposed to be doing by charter of RBI, right? And so the way it works, if we look at this, is that everything starts with the citizen first giving consent, and then based on this consent, and this is an electronic artifact. This is actually, a digital standardized set of attributes which all consent managers, all citizens, and all enterprises are supposed to uniformly adopt. And based on that, data flows happen. To put it very simply, based on that, whoever wants to offer any kind of a financial use case, could be credit, all kinds of loans, could be insurance, could be PFM, data flows happen again through the consent manager. Today's architecture, therefore, the consent manager ends up playing two roles. One is this citizen-facing role. So think of it as a B2C company, as the equivalent of Google Pay, Phone Pay, or any other UPI app. They have an app which the citizen uses to give consent. And the other is like a plumbing role. Think of a payment gateway, which is hidden behind the scenes, but which is orchestrating the flow of data, just like payment gateways orchestrate flow of money, right? So how does this look? I want to give you a more visual picture. I hope this is reasonably, these are live screens. I gathered them from some of the account aggregators. I know you are working with or on the journey to work with few. The journey essentially is, and if all of us, let's say, we'll all be new to A, so it's very similar to UPI onboarding, and that's the beauty of it, that UPI is given as a playbook, right? So it starts with the account aggregator as an independent regulated entity doing minimal identity verification of the user. Minimal. And this is important. The account aggregator, again, should not do its own KYC, etc. Remember, the account aggregator is not a financial services provider. While it's classified as an NBFC, that's only because there is no other, possibility in terms of regulations as to where to put the account aggregator in, right? But so the account aggregator is an NBFC AA. They are unique in that there is no flow of money through the account aggregator. There is only flow of data, right? So minimal identity verification through a mobile OTP. And then there is a one-time activity of me as a citizen indicating which banks and which accounts I'd like to link with my account aggregator profile, just like we link accounts with our UPI handle. And the same concept of a handle in UPI is ported here, where I get a AA handle. Typically today, all customers get an AA handle as mobile number followed by @FinViewA or mobile number @OneMoneyA, right? This is a one-time activity, right? Once this is done, any financial information user, which is a lender or an insurance company or a broker that wants to open a demat folio, when they seek my bank account data, I explicitly give consent on FinView's app here as a consent manager, and then FinView does the back-end orchestrations, right? Now, the next time I come back and I want to use this, how will the repeat user journey look like? Essentially, it will just be sign in, give consent, go back to the journey. The one-time activity of linking of an account is only one time. Once I've linked an account, it stays linked, much like UPI. Once I link my account, every time I do a payment through Google Pay, I don't have to get authorization for linking again and again, right? So this is the playbook. Now, typically, most journeys will never start with consumers downloading an account aggregator. I mean, we don't even know what a consent manager is. Why should I bother downloading an app, right? Unlike in the case of UPI. In UPI, the whole design was that cashback-led B2C promotions happened right from Paytm to Google Pay, initially Phone Pay, etc. And we were all exhorted to download. UPI is a very app-only journey today, right? I mean, there is nothing called a web UPI, although it was coming out, there were some goals. I was speaking to someone in Google Pay, they said one of our dreams was to have that. But it's a very app kind of a journey for reasons, right? But this won't work here. Because nobody will understand the need for me to download an app, link my account for something called consent. I mean, I don't get that. So how will it start? It will almost always start with a journey on, say, a bank property, where I go because I need a loan. So this is screenshots from another account aggregator called OneMoney. And I chose this to be able to represent the embeddedness of this journey, which is very unique. This doesn't happen, I mean, it today happens in UPI thanks to intent calls and all of that stuff. But you still need to download, say, a Google Pay for a cred, for example, to kind of invoke a Google Pay. But what if you don't download a Google Pay? Then you have to basically, first download it and then go to that other app and so on and so forth. So it is necessary today for citizens to use UPI, they necessarily have to have a UPI app. But the design here, which is, I think, very good, very interesting, is it is not necessary for you to have a consent manager app for you to even know about consent management. So a Bank of Baroda customer, potential borrower, comes to a Bank of Baroda property, your Bob World as it's called, and this is the screen. Sorry, I don't know if it's visible here. Is it visible, this one? So, the reason these two screens are shorter in kind of height is they represent the bank's properties, and these screens are essentially how the account aggregator powered by OneMoney will embed itself into the whole journey. So think of this as a digital journey. At some stage, and this is the all-important use case, the lender asks for data, and it gives an option to the borrower to say, how do you wish to proceed? And increasingly, what people are doing as basic use case one is they are stitching one more option to the existing options that are there, which is PDF upload, net banking. Hey, now you can also do automatic upload, as OneMoney calls it. Again, we have to standardize some of these English or vernacular terms, but this is how it starts. Now, when the consumer decides to try it out, right? Today, about 2.5 lakh consumers have already decided in the last 7 to 8 months to try it out without any promotion, right? Those 2.5 lakh customers click on this, they are taken to an account aggregator property. Now, this typically is either through a web redirection or a web SDK, which is embedded, or if this is an Android app, account aggregators also offer Android SDKs. iOS is also coming up, but obviously iOS will be very kind of marginal in terms of market share, right, for a country like India. The account aggregator journey then takes the consumer through the one-time journeys of, first a little bit of education that, hey, this is RBI licensed, it is end-to-end encrypted, it is going to be quick, and it will give you control, right? And there are different account aggregators some will do a better job, some will do a bad job of educating. This is again where the ecosystem maturity has to come in. The account aggregator has to independently verify. This is by regulation. Often I am asked, saying, is it really necessary for the account aggregator to also independently verify? Because lenders would have done that somewhere in their journey. And the answer is yes, it has to, because that's how the role has been defined as a regulated entity. They can't delegate trust, and I'll tell you why. Because as Bob, you are one of the largest banks in the country, extremely trusted. But this ecosystem is expected to work in the same way even for the smallest NBFC, even for the smallest SEBI registered investment advisor. And small doesn't mean dishonest, but small definitely means lack of adequate controls organizationally, right? So the account aggregator cannot delegate trust to the FIU to say, okay, you must have known the customer, so I will not ask the customer again, for his identity. That's not allowed, right? So there is minimal identity verification. Then there is the same journey of one-time linking. Then there is consent, and then the customer is taken back, right? So this is a citizen's view, right? I was asked to kind of speak about, and somebody can keep a check on my time. I know there's a photography session that I'll try and go as quickly as I can. 20 minutes. So I'll keep maybe last 10 minutes. I mean, I'll try. I tend to talk a lot. So you can stop me wherever you want and ask. But I was asked to speak about use cases. More important. And often, so there are two points. One is there are two concerns that, in the last 3 years that I've been working actively in this domain, I've seen two concerns, and the concerns have moved. One is, the first concern is for large banks like yours, will we lose, right, by joining this ecosystem? That's a very normal concern that people have, and I think we've moved. In fact, your commitment to the project implies you've moved beyond that part. Every bank more or less has moved, but those concerns still exist. Even the banks that have adopted, like some of the private sector banks that are there today, HDFC, ICICI, Axis, I will not say that they are not watching the numbers, and everybody has this fear that, with such digital utilities, will we as a bank end up losing the gains that we've made all these years? And I think every time we have to remind ourselves saying, firstly, there is no choice. The data was never yours to begin with. The data is the citizens, right? And there is regulation and law that is now giving control to the citizen to port their data. Data portability is a significant concept of any data protection law globally. So the first thing is, sorry? If I compare the NSE as a debit mandates we are giving it. Yeah. Your customers is investing in mutual funds with other banks, other entities. So they have taken loan from the other bank. So where he pays you from your account. Correct. So, technically it is there exist. So the fear, if there is a fear, it's already happening. It's already happening, absolutely. I think we have to see, once consent is given for the NSCH, by that time already has concluded the transaction, you are not even aware of it. Correct. He is only giving you, asking the consent, and consent is given, and the money is going every month. Correct. So I think people have to be ready in the banking setup for this. Absolutely. And the other thing is, once, like Sir said, once the realization comes that it's already happening, then the next thing is, okay, how can we benefit? And that's the real question, right? Because you have such a large trove, 130, 140 million consumers, how can you benefit from this? And I think what is clear is that this is more or less foundational infrastructure. It can be put to multiple uses. Yes, sir. Yeah. Yeah. Correct. We give them a kind of a consent where he gets the information from the external one. So I will always, I'm not skeptical about it, whether this is breach of privacy, whether it is allowed. I don't see any RBI or thing in this. No, so in fact, Grow is very keen on going live in the ecosystem for this, I would assume, for the same reason. So there are multiple ways today across multiple systems of taking consent. Let me take another example of the bureau, credit bureau, or PAN verification. There are so many data sources. Ostensibly for every interaction, there is supposed to be consent. But the problem and the broken part of that is there is no standardization as to how that consent should be taken. So people take sometimes implicit consent, sometimes it is a click wrap tick box consent, sometimes it is consent embedded in terms of service, right? To your point, RBI and the others have not said today that the other ways of giving consent are to be stopped, and that's a very practical way of nudging. So rather than say stop that, RBI is saying do this. It's a subtle difference, right? And I think essentially over a period of time, the nudge from RBI, starting with what they did last September to how they're engaging now through DFS, for example, they are advocating continuously that every institution should adopt A. And that will result in the death knell for alternate means of so-called taking consent, which we all understand and are cynical about, saying, is it really good consent? So this way of everyone adopting a consent manager's role as a regulated entity is the way that RBI and SEBI and IRDA and PFRDA are pushing their regulated entities to adopt. And it's only a matter of time, including SEBI, Grow will come under them. It's only a matter of time before they make it more and more It's an interesting question you raise, because in several other countries globally, there are actually mandates with a date saying that you must do this by this and this day. In UK, for example, the top 7 banks were given a date and say that you must. In India, 2016, the regulation came out, but RBI by choice said, we will not push the industry to adopt it by a certain date, let the industry figure out. I mean, hence Sahmati, hence a lot of advocacy. It's a very hybrid regime, we call it, of regulation. There is an enabling regulation, but there is no mandate yet. But the mandate will come in subtle ways, and grow and others will be forced in that way to adopt account aggregator. I don't know if I answered your question, but yeah. So I know I have. So the use cases are actually directly proportional to the type of data available. And this is the other point I want to leave you with, which is the other unique thing. So the one unique thing is that there is a regulated entity called consent manager. Unique as compared to other regimes, and unique for us as citizens. We have to now deal with a new, body called a consent manager and so on and so forth. But the other unique thing is the scope of data is not just bank statement. The scope of data as envisaged in RBI is 23 different financial instruments. And so that cuts across 4 financial instruments that typically banks have, which is current savings, term deposit, recurring deposit, credit card, right? So these statements or these financial instruments are already defined in the RBI specification as shareable, which means every FIP, once it joins the ecosystem, now you can join the ecosystem. So today there are about 185 million current and savings accounts enabled. There are 9 FIPs that are live, right? Count all the private sector banks, and we are very, very keen and hopeful that amongst the public sector you will be, one of the leaders there, and the numbers will boom. But even with the 9 private sector banks that are live, 185 deposit accounts are enabled, which means those 185 million citizens who have a savings account or sole proprietors who have a current account can technically today use a consent manager to share their deposit account. Deposit account here means current and savings, not term and recurring, statement in a standardized format. Now, the interesting thing that has happened also with this is the attributes that have to be shared by every bank have become standardized. Now, one of the big challenges today, which is why you have the likes of Perfios, for example, and so on, who've made, solved that problem for years, is there is no standard in the statement format that comes from one bank to the other, right? So if I am a lender, I need to be able to parse 5 different kinds of statements, and I have vendors who do that. This is taking that entire thing out of the equation. Now it is saying that every bank has to share the exact same data in the exact same format. So it is making that also a non-competitive thing, right? I mean, and it is making it frictionless for lenders to be able to put in tech rails once and then be able to scale their lending to be able to parse data of every bank. No longer do you have to be restricted, right? So, but the ecosystem today is launching in a scaled manner. It starts with CASA. In fact, even TDRD, there are several banks that are ready, but we have not seen them switch it on. And that's one of the things that we as Sahmati will do, where we put in codes of conduct for ensuring citizens gain access. But with CASA, what can you do? I think we are seeing a lot of journeys where the simple act of being able to give account aggregator as an option, in addition to printouts, PDF and net banking, is where it is starting. And this simple act alone, if you look at the drop-off rates of a statement upload net banking, I was speaking to one large bank yesterday, and the best that they have from a statement upload is 45%, which means out of 100 people that start a lending journey, they go to this point where they have to give data, 55 people end up not being able to give data that the business rule engine can progress. Now imagine the amount of money that's being lost on the table. The best that we have already seen in the early days with account aggregator today, the best day that I have seen with data is 83% success. The average today, and there is variation, we are working with the ecosystem, but the same bank has reported about 60 to 70% success rate today. Now, why is it not 100? I'll come to that if we have the time, right? There are reasons, part of which are to do with, betterment of journey for sure, but part of which is also to do with scope. The simple point is that in today, FIPs have started giving only single owned accounts. So if I have a joint account with my wife, I can't discover that today. And we see that out of the 30 people that are dropping off, 15 of them drop off at the discovery stage. That's because they end up not realizing that they can't discover their account because it was maybe an either or survivor or whatever. Okay, wonderful, wonderful. Right? So the first use case is an efficiency use case that everyone is rolling out, which is plug-in account aggregator as yet another option. And we are seeing that month on month, this growth in the primacy. So I'll share some figures. Month one of the banks said that when they presented account aggregator option, 27% of people clicked on it, exercised it. Right? The remaining, which is understandable, they don't understand, you have to educate them better. Month two, that grew to 40%. And this is without any formal, nobody is doing awareness. The government has not come and put out a public awareness campaign. Neither are FIPs doing it, nor are AAs doing it yet, right? Very organically, by sheer word of mouth and with good journeys, right? And I must admit that sometimes the smaller companies, the more fintechy companies do a far more agile job of bettering their journey and pivoting it. They are experiencing even higher, success rates by just tweaking the journey, right? So I think the very first use case is just take any, and most people have started so there are about 30 FIUs today that are live, but traffic is being driven largely by about 6 FIUs. Out of the 6 FIUs, there are 3 NBFCs and 3 banks, right? The types of products that they have plugged in is an SME loan, that's lending card. Navi and IIFL are the other 2 NBFCs. They have done unsecured personal lending. HDFC, Axis Bank, ICICI Bank, SDFC has rolled it out in a 2-wheeler loan. Axis Bank has grown from 0 to, I think thousands of consents in the last quarter. They started it with, in fact, an existing to bank SME loan top-up kind of an offer where, to existing to bank, they are already giving an SME loan. They plugged in saying that, if you want more funds, give us data through an account aggregator if you have some other instrument and we will give you. But I think they're seeing more traffic now coming with that being plugged into different journeys. They're doing unsecured personal loan and they're doing 2-wheeler and 4-wheeler loans. Now, what are they doing in all of this? They are doing nothing great or unique in terms of very complex stuff. They are just taking in the same journey which involves, like I showed earlier, right? They plug in that option, they plug in an account aggregator's SDK, or they simply do a redirection. The amount of tech work involved is frankly very low as compared to building the entire remaining part of the journey. There is a standard web redirection guideline which you can code for, and regardless of which AA the citizen chooses, the same redirection will work for every AA. After that, it's the AA screen that is doing the job for you, right? Linking, discovery, consent, etc. And then the redirection happens for the citizen back onto your lending property, you continue with the journey. Now, of course, your backend, and I understand Pyramid is the vendor, the TSP, that will take care of the plumbing, which is getting the data and feeding it to your BRE and all of that stuff. And of course, you need to make tests in your BRE. I'm not saying all of that is not required, but front-end journeys are very simple. So this is where it is starting. But there are 2 other use cases which actually are not yet live, but people are very, I keep hearing a lot of talk, and in the modern world, NPAs, yes, Sitaram. Yeah. JSON. So the XML. So what is happening is the core banking system through the gateway is passing an XML stream of the entire data. The XML is being encrypted in the FIP middleware, and the encrypted XML is being passed as a field in a JSON file. So the data exchange between the FIPA and the FIU is a JSON file. The financial data is actually encrypted XML in one of the attributes in the JSON file. Right? So the other use case is monitoring. And I think today from what I have learned, you are the bankers, I'm not, is that monitoring is actually not done by default. It is done more as a matter of design. You're not really bothered with monitoring if it doesn't meet certain criteria, which is to do with ticket size, is there collateral or not, what is the tenure. But imagine an early warning score that lands just like a credit bureau score without you doing anything much. Imagine a situation where for every loan, and increasingly as loans become sachetized, as loans become more digital, there will be a perception that there is more risk being taken. So the need for monitoring may go up because you're growing into different personas of user segments. How will you monitor accounts, right? Unless there is infrastructure that almost feeds in the data that you need to monitor without you doing anything much. And that's the big use case that we think will go live, where AA-enabled recurring consent. So just like Sitaram sir said about mandate, there are two types of consents that citizens can give you. One is a one-time consent, which is typically what they will give you to receive a loan offer. Saying, okay, I'm going to give you my statement today, last 12 months, after that, please give me the offer in 24 hours. If I am happy, then we will talk, right? So it's a one-time consent. He is not allowing you to process the data beyond, 24 hours, let's say. But after that, once he accepts the offer, then you are asking consent saying, now I'm giving you a 2-year loan or a 5-year loan. I need consent to monitor your account to verify your repayment capability continuously. So now he has to give consent, and that consent is recurring consent. Now he has to allow you to say that, yes, you will pull data, say once a quarter, once a month, whatever is your recurring frequency. The consent architecture allows that. It's the same tech rails, the same user journey that both the enterprise and the citizen have to stitch. All that changes is one parameter which says fetch type recurring, and there's a frequency. And all of this is again standardized. So the point I'm trying to make is, the use cases start with efficiency in terms of data acquisition for offer. It can then go into efficiency for monitoring, and the direct impact on NPAs and so on and so forth will be visible once you do this, right? More and more. Yeah. Great, absolutely. So the role of the consent manager, why is there a consent manager? And please stop me, Niket, if there is any time. I won't be conscious of the time. And I won't feel bad if you say, shut up, we have to go for a situation, right? I'm absolutely happy. 10 minutes. 10 minutes ago also you said we have 10 minutes. So okay, Pravina's session just started there, is it? Okay, so good. Oh, so continuous monitoring is going on. Consent. So the question that sir asked about, how can there be a guarantee that if I am saying I am going to give you consent to pull data 10 times, that only 10 times it is being pulled and not 11 times, 12 times? What is the guarantee? That's the question. So this is where the primary role of a consent manager comes in. RBI's view of the consent manager is you are acting on behalf of the citizen. You are not acting on behalf of enterprises. Your role is to ensure that you act as the first checkpoint when there is a data request. And FIU can simply raise a data request. It can be either accidental, can be willful, can be fraud. Let's assume all possibilities. It is the consent manager who is the source of what is called the consent artifact. The consent manager's role is actually to be the source of truth for what did the customer agree. And that is captured in something called a consent artifact, a copy of which is given to the FIU, a copy of which is given to the FIP. But the source of truth is the consent manager. When a data request comes, and in today's architecture, all data requests are routed through the consent manager itself. It's the consent manager that is supposed to act as gateway number one to say, hey, hang on, there is something called a consent use attribute. The consent use attribute is supposed to be incremented every time there is a successful data fetch happening. If 9 times it has already happened, this is the 10th request, consent manager will pass it through. But if 10 times has happened, it is supposed to error out to the FIU, not even bother telling the FIP, saying, sorry boss, this is not done, right? But does it stop there? What if the consent manager doesn't do a good job? RBI then says, and this is where pyramid and all of the FIU, FIP, TSPs come into play. They say that as the data custodian, since you are receiving a copy of the consent artifact, as FIPs, you must also exercise due diligence before you pass data. And so all the TSPs today who are certified against the specifications, they are supposed to ensure that although an account aggregator is supposed to have done its check, if a request passes the account aggregator, they will not take it as granted. They are supposed to also verify the consent use attribute. Now, obviously, there are a lot of edge cases. There are a lot of, as tech people, we all understand it. But from an architectural standpoint, there are two defenses being put in place for the citizen, both A as well as the FIP. Right? So, does that answer your question? Yes, please. Yes, sir.
How is the pricing that is going to be built?
Yeah, that's the other third big question.
Because most of the time we invest a lot for all these systems, but then how do we recover what we invest there?
Right. So, so last year, and this is where we'll need more working group participation from the likes of Bank of Baroda. This came up as one of the significant problems we must try and address upfront. Everybody knows the UPI story and what it means, right? There has been an in-principle agreement in the ecosystem, and I'm talking about AAs, that FIPs must be compensated for the infrastructure investment they have made. So there are two things that have come up. One is, and this we heard in the DFS meeting where the DFS secretary said the same thing last week. He said data can't be monetized. It's not a monetization asset, but service can certainly be compensated for. So the FIP service and the terms being used by banks, and this actually, the conversation was initiated by SBI. Then there was a conversation with all the banks that went live as early adopters. AAs and in fact Sahmati, in fact I was involved a lot in drafting a proposal as to how should FIP compensation happen. But all the FIPs and AAs said, look, this is not, let's not put the cart before the horse, let's go live first, because we have no clue about what volumes we'll see, etc., etc. But this is something we must fix. So there is a draft proposal already ready. It's currently being discussed in working groups. And it has been accepted by the industry. A lot of these self-regulatory guidelines are coming from the industry. RBI is very clear so far that they are not going to get into matters of pricing. All they have said is that citizens must have transparent pricing published by AAs. But should FIPs be compensated, not be compensated, leaving it to the industry. I know IBA is working on that, and as Sahmati, we worked on a proposal. It will happen in our opinion, right? So, bottom line, if we just look at use case one of efficiency, it is not just about making lending more efficient. I think it is also about shifting the needle from a very risk-averse kind of lending that happens. And I know, especially public sector banks do a lot of ETB lending, less of NTB, and even lesser of NTC, right? And one of the reasons for that is because you don't really, the trade-off is I'm happy lending where there is trust in the data, but where there is risk in the data, I am happy leaving that money on the table. Now that needle can shift because the trust in the data is being accelerated because you are getting digitally signed data from a regulated entity through a regulated entity without the customer touching it anywhere in between. So the whole point of shifting the needle to do more NTB, NTC, even for public sector banks should happen, and that's one of the big growth drivers that this should result in. Second, a lot of the products, public sector banks have the lowest cost of interest. If I had to take a home loan, I'm happy to wait to get a loan offer. But if I walk into a car showroom and I want to walk out with a car, I am not happy to wait, for 5 days before I get a loan offer. So the turnaround time is a critical aspect in some loan products. And there, people who do a better job of collecting data, underwriting, presenting a loan offer win, even though the basis points of interest may be higher than someone else. Now with this, you can compete on that efficiency as well equally with anyone else, because now everybody is getting the same kind of data using the same rails. There are 5 account aggregators, and RBI is pushing all of the citizens to use the same way of giving data, right? So with a little bit of investment shifting into your underwriting and investment in AA as a means of acquiring data, the turnaround times for making a loan offer across products, we believe, should also improve, and that again becomes a growth driver, right? Costs we've already spoken about. There are enough costs that are incurred to just rework, PDF, checks for fraud, and to, deal with data insufficiency problems. I've heard stories of PDFs never coming as one PDF. I've heard stories of PDFs not coming as PDF but Word. And so there's a lot of, reasons. All of that goes out of the window. But is this the end of the story? This is not the end of the story. The real big growth opportunity is that while there is, I think the UK Sena Committee report said 14 lakh crores worth of SME lending that happens, there is a 25 lakh crore worth unmet demand of MSMEs. Nobody is serving it. Why is nobody serving it? Because lending is still collateral based. These MSMEs don't have collateral, but they need cash flows. They have a lot of rich digital footprint thanks to UPI and so on, but nobody is willing to look at it, right? Now, this is really the story of the 100 million Indian base today with a 1 trillion GDP, moving to financial inclusion phase 2, where formalization of credit happens. It is these people who are being brought into GSTN. It is these people who have a UPI footprint, but these people don't get a loan. These people don't get insurance. That is the real story that we believe infrastructure like AA serves. Why? Because a very fragmented way. There is some NBFC somewhere, there's some fintech somewhere that is focusing on some personas, but it's all very fragmented, right? Instead, it should actually become a much more structured, stable, effective network. And in that network, in fact, yesterday at AFST, the finance minister seems to have said the same thing. In that network, it needs to be where you have at the heart of it the product manufacturers who still continue to enjoy the lowest cost of capital. You have a bunch of loan service providers who do a great job of serving their own cohorts of SMEs, retail individuals, etc. And you give choice to businesses and individuals to get a loan offer wherever they want, right? How will this happen? This won't happen unless there is an open digital network that has standardized the protocol where once a Bank of Baroda implements some infrastructure here, that should give it access to everyone. It should not have to do point-to-point integrations. The only way that can happen is if all this protocol is standardized, right? And that is what open digital networks promise. They promise standardization so that partnership with other platforms can happen, and that's the only way to grow credit safely and exponentially. I'm done. Questions. So the last piece I want to say is, while you've started on your AA journey, there's something called OCEN, which is Open Credit Enabled Network, that has standardized protocols as well. OCEN, think of it as a wrapper around AA. To do OCEN, you have to do AA, which is you have to have a standard way of acquiring data. But then APIs to source loan offers and to process loan applications on both ends. If that is also standardized, then suddenly Bank of Baroda doesn't get constrained by its own digital properties for customer acquisition. You can basically plug yourself in some remote loan service provider, that's say a Swiggy or a Flipkart or government-enabled marketplace or SIDBI. All of these are actually putting out marketplaces. How does Bank of Baroda use that channel to acquire data, to acquire loan application, make a loan offer? It can't be through a point-to-point integration. So if you are OCEN enabled, which means you have someone who's giving you an OCEN implementation, you are able to, with one shot, plug yourself in as a product manufacturer into any distribution channel, right? Okay, we'll pause here because there's much more that I can speak about, but happy to take questions.
You said presently this is restricted only to CASA and liability products, or the?
So the ecosystem decision, the RBI has created 23 different financial instruments as the scope.
Okay.
And they have left it for the industry to decide how to ramp it up. So there's no restriction.
Okay.
So, but 3 years ago when the first set of banks came in, after a lot of discussions around many aspects, everyone felt that let's start phase 1 with enabling CASA. But the tech rails, and in fact there are at least a handful of banks already certified on enabling TD and RD also, but they've not switched it on because everybody wants someone else also to do the same thing, right? Okay. So regulations and tech are the same for 23 different kinds of financial instruments. Okay. For a bank, out of 23 it is 4. So it's deposits, which is CASA, term deposits, recurring deposits, and credit card. In fact, credit card is the only loan product that made its way. Other loans are not part of the scope.
Okay. In the entire 23, other loans are not there?
No, there are no liability products for a customer in this except credit card. And I think the reason for that was that access to liability info, in fact, that conversation is coming back now. It was treated as a solved problem because of the bureaus. You already get liability info from there. Why do you need? But I think there's a lot of conversation happening now where, in fact, banks are saying that no, NBFCs actually have richer and more recent information than what they may be providing. NBFC is also saying the same thing, that banks also have richer and recent information. So there is a working group that's working on reciprocity, which is trying to create new recommendations of even loan information, something called a statement of account that I believe is an informal thing that flows amongst lenders. So lending card, SDFC, Kotak have done some discussions in a working group we mediated to come up with a recommendation of a new schema, 24th, that can be given to RBI, which is going to be for a loan. The 25th and 26th will be GSTN. We are working to get GSTR 1, GSTR 3B as 2 instruments which will come in. So there's no restriction, sir. It is only an ecosystem decision. Yes. So all kinds of mutual funds, so SIPs, AIFs, etc. Insurance. So in the next 6 months, our expectation is that at least a couple of insurance companies will go live, both as FIP, FIU. So insurance details will be available. Even EPFO. So EPF, PPF instruments are also part of what RBI has listed, but I think we'll have to speak to the regulators there to activate it. That may take a little more time. And pension funds also. So PFRD is also there. So once GSTN happens, because GSTN is under Department of Revenue, we will have a playbook to go to CBDT. There have been initial discussions with CBDT for income tax details, but no visibility into when that will come in. But I think GSTN is like the first example where even RBI is expanding their notified types of instruments. Because today, if you look at master directions of AA, GSTN is not listed as an FIP. A lot of discussion has happened where RBI and Department of Revenue have agreed and done a handshake that, okay, we will now increase the scope to include GSTN. Once that implementation is done, which we are hoping will happen in the next 8 to 12 weeks, that's the commitment that kind of we are discussing with DFS and so on. We believe that we can then go to CBDT to say, look, there is already an example precedence. This can also happen. I see. Okay.
Getting the CBDT data is becoming difficult.
I see.
Although it's a government portal. Okay. So that will take some time.
That will take some time. I see. Okay. Would love to understand what that act changes. So sometime we can speak offline too. Yes, sir. Correct. Yes. So 2016 it came. 2017 the tech spec came. The master direction came out, but the tech spec came out in 2017. 2018 actually the tech spec draft became a published standard. 2019 the first licenses were issued by RBI. So while the act came, it took 3 years for tech and licensing to happen. We must acknowledge that, right? Then 2020, or actually between 2019 2021, a lot of stuff happened in the world. I'm not going to speak about that. But, you know, the tech implementation, first set of early adopters, finally last September, as all of you know, go live happened with the first set of early adopters. It takes, I think, we sometimes underestimate the kind of time it takes for. It would have been easier, let's say in hindsight, if RBI did what UK did, where they launched in 2016, and they gave a timeline of, I think, 2018 September for the top 7 banks to go live. It's a mandate. RBI didn't do that. It said industry, you figure out. So to your question, today where we are is we have, like I was saying, we have 5 As, we have 9 FIPs, we have 30 FIUs, and we have maybe about 180 to 200 million accounts enabled across these, right? No formal promotion is happening yet. So we have 250,000, which is almost 2.5 lakh consents successfully delivered. 2.5 lakh citizens, and actually the number of people who've tried it out is even higher, closer to 3 lakh. So 3 lakh citizens who are fundamentally borrowers. These are 3 lakh citizens who've come to a lending card, Navi and HDFC Axis. They have no clue about consent management. They see this journey, they try it out, and they end up successfully doing it, right? I mean, 3 lakhs people tried, 2.5 succeeded, right? 3 lakh plus. So now, in fact, later this week, we have a session where we are trying to discuss. Everybody acknowledges a citizen awareness is required. Nobody is doing anything about it. So as Sahmati, one of the things that we will try and do is build. So far, we've been focusing on advocacy with participants, like workshops like this. Because customers, we don't believe, unlike UPI, where Google Pay, Phone Pay threw money and said, you download our app. Here, no AA is going to be able to do that. Because the concept is, so it has to be lenders, it has to be SEBI registered investment advisors who educate customers saying, hey, your data is required, but here's a way. So we believe that a lot of citizen awareness will be required to be done. But at the same time, there are newer AAs that are getting licensed. As all of you know, PhonePe has got a license. Tally has got a license. CRIF has got a license. So there are a different class of entities who probably also have enough muscle to do promotion. We will see how that happens.
But do you think, sir, we are the third largest bank?
Yes.
We have such a huge database we have.
Correct.
And if we share our information with the NBFC and other players, it will be it is not a beneficial to me.
So let me interrupt you right there. Sir, it is not your information, it is mine.
Yeah, sir. I'm not denying.
No, but you are denying it. See, this
So,
is...
See, I'm not taking an advantage. I'm giving an advantage to the other.
No, you're not. No, you're not. So let me first, I think this is the first mindset that we have to start with, and this is going to happen through law very shortly, data protection. Data is, when we sit with t-shirts of our companies, we tend to behave differently as when we stand without t-shirts, right? But we are the same individuals. It is my data. If I wish to share it, even today, I can download my Bank of Baroda PDF and give it to the NBFC. Are you preventing me from doing it? You are not. Are you going to significantly motivate me that I will actually fly away from Bank of Baroda just by giving me a more convenient way of doing it? Who will give me the lowest cost of interest in the market today? So I think first this myth that we have created that, just by providing a new feature, we are going to give an advantage to our competition has to be broken. There is no such thing. Customers will make rational choices based on factors that is not just convenience. It is based on a wide variety. But if you don't give the convenience that another bank is giving, I can guarantee you, if I were a Bank of Baroda customer, I will fly away. I may still take a loan from you, but I will not respond to a cross-sell opportunity that a Bank of Baroda comes in, because the market share in my head has moved saying, "Arey, bikar hai." Right? So the first point is that please don't ever imagine it is your data. It is not, and that narrative has to change. So the narrative has to be, how can you as the largest bank, the third largest bank, with the lowest cost of interest, expand your market share to compete with them? In fact, I would say this you should look at as a reverse. Today a fintech can claim they have better technology. They have better tech people to do better point-to-point integrations. Look at what EP5 is doing. Look at what a Jupiter Money is doing. They are doing point-to-point integrations with a federal bank, with an Axis Bank, for example, because they are depending on better tech. This allows every bank to compete on tech because the tech is getting standardized. There is no point-to-point design thinking that has to be done. Now in one stroke, a Bank of Baroda loan with the lowest cost of interest is available to someone who maybe didn't even think of Bank of Baroda, because I don't even know where to go. I'm going to, some nice fintech, which is a marketplace. But boom, suddenly I see a Bank of Baroda loan offer, it has the lowest cost of interest. I'll click on it and I'll take it, no? But how do you enable that? You cannot enable that by saying, no, I will not join open digital networks, because if I join, then, my customers will fly away. Your customers anyway fly away. So I think it is basically more of a growth driver that I think we should look at in this, rather than it being a flight of customer and a flight of capital. But happy to share offline. I know we are almost done. Thank you so much. Yeah.
So that was Mr. Vamsi Madhav. Ladies and gentlemen, please give a big round of applause. Sir, thank you very much for accommodating the available audience. You've generously explained us what exactly the account aggregator is, rather we should say consent manager, and what are the use cases of having the consent manager. So thank you very much for that. Now I would request our general manager, Mr. B.S. Sitaram, head digital platform and products assets, to please come on stage and felicitate Mr. Vamsi Madhav. So that's Mr. Vamsi Madhav, Chief Operating Officer, Sahamati. Thank you very much, sir. And next, we have 3 more sessions lined up, which will be back-to-back in Betul Hall. The next, we have a panel discussion, and one of the speakers already present over here, Mr. Yazdi Lashkari. So, buy now, pay later. Is it something like an old wine in new bottle? This is something that we'll discuss over here. But before heading towards the next session, I would request all the participants to move towards Grand Ballroom, because there we'll be having a group photo session. Post that, within 10 minutes, I would request all to be over here, because we have the panel discussion, then we have discussion about the products lined up in financial year 23 from our bank, and advanced analytics in BFSI. So see you soon.
Santosh, can you hear me? Santosh, can you hear me? Hello. Can you hear me, Santosh? Hello. Hello, Miss Kamala. Since I'm not audible there, nobody is responding from there. I'm able to see world and all some head has passed by.
Check.
Somebody has passed by just now, but nobody is responding.
Sir, can you hear us?
Okay. And please, please label my name as Professor Vadlaman Ravi. Let's add Professor before that. Thank you. So I'm putting on my headphone. Hello. I'm putting on my headphone. I'm waiting for somebody there. Hello.
Sir, 1 second, sir. Professor, sir, 1 second. Yeah.
Yeah. Can you see me now?
Yes, sir. Absolutely. We are able to see you. Yes, sir.
But I cannot see you. I can see somebody's head. That's
1
all.
second, sir.
Okay, great.
Sir, you are able to? Yeah.
Yes.
Yes, sir. Thank you.
Thank you.
Thank you.
Am I audible?
Yes, sir. Absolutely. Yeah, you are audible.
Great.
Yeah. Thank you, sir.
Thank you so much.
Thank you.
Yeah, please change my name as I suggested. That's all.
Yes, sir. Yes.
Add professor to that.
Yes.
Thank you.
Yes.
So good morning, ladies and gentlemen. I would request you to occupy your seats. Okay, before we start the session, I would request all the participants, if you're going to ask questions, please ask once you get the mic. If you don't have the mic, just raise your hands, we'll pass off the mic, and then please put forth your question, because what's happening is the event is broadcasted live, and when it's being broadcasted, the voice is not audible. So my humble request to all the participants. So we are over here on the second session of the concluding day of Bob World Digital Conclave 2022. So this session is quite an interesting one. You know, till now, we have had all the sessions wherein individual speakers have come in and shared their insightful thoughts on variety of subjects. But now, we have a special discussion, rather a panel discussion, where we have a moderator and two panelists discussing about buy now, pay later. And is it an old wine in new bottle? Now you can see in last few days or maybe in last few months, you would have seen the apps like Amazon, they do offer you something like buy now and pay later. So what you need to do is you just buy out something and pay after some time, maybe a period of 1 month or so. And over that, they'll also offer you some cashback. I mean, this is quite a lucrative deal for any of the consumer. So if he wants to avail this, anyone would be happy to go for this. Even recently, you know that Zomato has jumped this bandwagon, and they've also come in and said, eat now and pay later. Again, one thing to wonder is a person who might want to order a roti or a sabzi, which is hardly like 100, 150 rupees, he's still given that option to buy now and pay later after 15 days. So probably we would, just wonder if someone has an app like Zomato installed on his smartphone and still he needs 150 rupees to pay later. Now, why is that? What is the proposition behind this, and what is the value to the companies who are offering this service? So this is something that we are going to explore in this particular discussion. So to begin with, I would introduce our moderator, Mr. Amit Wagh, partner and lead financial services business consulting, KPMG. He brings to the table over 2 decades of consulting experience, engaging with clients that include Indian and multinational banks, investment banks, and insurance companies. He has executed a variety of engagements ranging from digital strategy, innovation, customer engagement and experience, data-driven insights, operational excellence, and application implementation. So please, ladies and gentlemen, give a big round of applause to Mr. Amit Wagh. And if the panel discussions were as interesting as the members in it, then we are here for a splendid time. Because for upcoming discussions, we have two very insightful professionals who are best positioned to throw light on the subject. Buy now, pay later. Is it an old wine in new bottle? So let me introduce the first panelist. We have Mr. Yesdi Lashkari, who's the founder of Flex Money, whose mission is to simplify and democratize consumer finance. 25 years of being an entrepreneur, software executive, and technology innovator, he has seen him being closely involved with several successful entities in India and US. In fact, after his original startup Firefly was acquired by Microsoft, he has held a few leadership roles with the IT giant. Mr. Lashkari also acts as an advisor and angel to startups. Advisory comes naturally to one who has played exactly such a role with reputed entities such as McKinsey and Stanford Graduate School of Business, an alumnus of MIT University of Wisconsin-Madison and IIT Mumbai, and one who holds 10 US patents for multiple technology innovations. It is a pleasure to have you, Mr. Yesdi Lashkari, to grace this panel. Welcome, sir. And next, we have the panelist over here, Ms. Aishwarya Jaishankar, who's co-founder of Hyperface, India's first credit card and credit line as service platform. Before becoming an entrepreneur, she was a successful digital banker, having led out several key projects and repeatedly built successful scaled products. Ms. Jaishankar firmly believes that banking experience need to be meaningful and intuitive, and not merely innovative for the sake of being innovative. A stance that has led to many awards and accolades and recognition amongst the top 10 women in Indian fintech. So let's hear it for Ms. Aishwarya Jaishankar. So now I hand over the podium to Mr. Amit Wagh.
Wonderful. Thank you so much. Thank you for the introduction. I think you started this very well, by saying BNPL or buy now, pay later has different connotations, right? Zomato, eat now, pay later, right? So number of those connotations that are emerging. And it's a very topical subject, and I was reflecting back on the subject, and particularly the digital conclave and BNPL. So just like we talk of generation, the millennials being digitally native, right? And if you have to look from a product perspective, then if there's one product which is very digitally native, which has emerged with the digital ecosystem, it's probably the BNPL product, right? And it's also a product which is evolving, and I'm sure both Yazdi and Aishwarya are going to share their experiences. It's evolving. It's also a product where we have seen innovation. We are probably likely to see more innovation. It's also a product where we've seen the ecosystem play, both at the merchant end, with platforms, with lenders. We're also likely to see evolution with more data getting into it and inclusivity, right? New to credit, not just new to or existing to credit customers, but new to credit customers. And a lot of that data is probably going to shape the way we'll see some of this evolving. How is this product going to be an engine for some of the lenders? And how have some of the lenders used this as an engine from a growth perspective? What's the economics behind it, and how do we leverage that? I think those are some topics that we will also debate. We'll keep 10 minutes or maybe 5 minutes in the end for a couple of questions from the audience as well. So, Yazdi, let me start with you, and your perspective, because it's a product which is evolving at the customer end, at the merchant end, and especially when the customer is interacting with the merchant, right? It's a product where we've seen innovation, right? It's a product which is about embedding finance into an experience. Your thoughts and how you've seen the evolution from a product perspective, and where do you see? Because we see a variety of variants in the product category, right? So just opening comments.
Can everyone hear me? My voice is a little. Okay, great. So thank you, first of all, for giving me the opportunity to be part of this panel. BNPL is in the middle of the biggest hype cycle there is. So we should all recognize that first, right? In India itself, there are 6 variants of BNPL that we have counted in the market, from fintechs, from banks, from other players, right? And those numbers are growing. So it's a bit of the Wild West right now, and the RBI is getting alarmed and moving to standardize the product. As we said, BNPL or pay later, which is sort of the small ticket, high frequency charge facility that a Zomato or a Swiggy or a MobiKwik typically offers, is not really a credit product, it's a convenience product, it's a charge facility, right? And because of that, some of the issuers or the fintechs have played fast and loose with the KYC guidelines or the reporting guidelines. That will change. But let me just step back for a second. When we started Flex Money, I sat on the board of a payments processing company after I came back to Bombay called Tech Process Payments, that was then acquired by Ingenico and Worldline. And I saw the entire digital payment space and e-commerce space taking off, and we'd been tracking Klarna and Affirm in other markets. And our thesis was that at that time we didn't have a name like BNPL, we called it digital credit, if you will, is going to be a fundamental transformation of retail credit in this. It's going to be the first internet native credit product that can be offered, right? Your credit identity will not be a card number or an Aadhaar number. It will be your internet identity, a mobile number in markets like India. Fundamentally, so we start, and our thesis was that fintechs are going to raise lots of money, lend directly, but the bigger opportunity was to enable the ecosystem with a world-class digital product ecosystem being Bank of Baroda and the larger lending ecosystem, which between them have 1 billion account relationships and a lot of trust already built, but don't have necessarily the digital product or the embedded distribution that a BNPL product needs. So that was our thesis, and now BNPL has become the buzzword. I'll just take one more minute. So we believe that this is BNPL and the suite of digital credit products you're seeing, cardless EMI, various other versions of this, is fundamentally as transformative as e-commerce was to retail. The internet transformed it, though it took time for us to understand what's possible. Similarly, the way cloud applications from client server, right? Seems like the same thing, but it's a fundamental shift. BNPL and its cohorts is internet credit. And it's a fundamental shift from paper finance to cards to something completely commerce embedded. Now, what does that mean for banks, right? Traditionally, banks are product silos, right? And you have a P&L for each silo and the problem with a BNPL type P&L is it's a thin margin product, if you look at pay later. So you really treat it as an acquisition funnel for cross-sell and upsell and for stickiness and loyalty, right? So the experience matters a lot more than just the product. And that is the phase the market is moving into. And we, along with players like Hyperface, we are here to help enable the ecosystem.
No, I think great point, Yazdi, thank you. Aishwarya, your thoughts, I think just picking on where, Yazdi, you mentioned about embedded commerce, right? And Aishwarya, you do a lot of work in Hyperface with merchants, right? And embedding products into the journey. So your take in terms of how you've seen, particularly with some of the brands, how has this traction kind of gained momentum,
I think Yasdi put it really well when he said playing footloose and fancy, but the reality is we are a completely credit-starved economy, right? When we compare ourselves to any developed market or even markets at par with us, one is definitely culturally we are not really somebody who go out and borrow. Second thing also is that the whole organized credit framework has not really been very friendly, be it managing unit economics, be it managing need-based, segment-based lending, right? Let's just take a step back. I love the topic. It says old wine in the new bottle. It reminds me of the days when my mom used to have an account with the local grocery store in the street end, right? All of us as kids have just gone and bought there. We will just tell them, Bhaiya, is ghar ka likh do? End of month when accounting will come home, yeah, we would have eaten a little bit more poppins and biscuits, but the economics of it is very similar to what is today pay later. Now, what really happened there? The street vendor knew you. He knows where you live. You know what we bankers call as residence stability, residence proof. He knew also what your neighbors think of you, which is your intent. So, and lastly, generally, you know the affluence of a household, chota ghar hai, bada ghar hai, all that, which is your ability. Now, all this is data, and this data is liquid gold, right? What happened in the framework of larger urbanization, larger retail chains is this whole personal touch sort of got lost. And that's really, in my mind, what digital brands are bringing back today on the table, right? The relationship you have with your food delivery app, with your e-commerce, with your makeup app, cosmetics app, is one-to-one, right? And with the amount of digital traces that are available. Just prior to this, we were talking about how Swiggy reminds me that I like to eat puri for nashta. It's very spooky, but that's the level of data that they have. Now marry these two, right? Customers are credit starved. Your brand's sitting with data and mostly meaningful data. Somebody was joking about UPI data that Istriwala or Dobika data hai. Versus that, consumption data is very powerful. Where you eat tells me your affluence. How frequently you go there tells me even more about you. Now, brands are sitting with this data. How do you marry the two? And that's where players like Hyperface or what Flex Money does comes in here. In a way, we are selling sieve in the gold rush, right? We are the platform players. We tell banks, hey, we will find the NBFC partner for you. We will buy the cover, get the prepaid issuer on record for you if you want to issue prepaid as a form factor. We will tie up with an aggregator if you want to offer checkout finance. We will do a data room exercise to tell you how you can meaningfully infer from your data and start lending. Now, any brand can be a lending brand is the whole principle of a hyperphase. We want to empower every brand out there with an ability to lend and to lend the right product, because again, we're all bankers here, हम सबको पता है lending में ही पैसा बनता है, right? And with an economy like ours, where there are just 71 million credit cards in this market versus 900 million debit cards, that should really tell you the opportunity that's there. And there are 450 million people sitting with digital devices and digital data tracks. How are we going to empower it is really the question, in a way that's purposeful and meaningful to the common man, and they benefit from it. Yes, there is a tendency to go wild in the gold rush. I really hope that's where the regulator comes in. But I feel these are all undeniable needs of the market that we are serving to for the customers, right? And how every brand can solve for it, we should leave it to them. We should give them a Lego block and step back, basically, is the idea.
Yes. No, Aishwarya, thank you. And at some point, we'll come back to understand a couple of use cases in terms of how this data, which is at the brand end, can be leveraged from a credit perspective, you know. But Yassi, your thoughts, the platform, Flex Money, right, is working, it's a B2B, working with distributors, getting bankers or lenders on the platform. And a large thrust has been existing to credit, but you're also working with new to credit kind of models as well, right? So from that perspective, from a merchant, customer, the data that gets generated, how can that be leveraged? Because typically lenders have looked at customers, their credit worthiness, their assets, you know, collateral, whatever. But these are surrogate data points that are emerging. So looking at the platform, how is that getting enabled, you know?
So that's a good question. We see the market evolving in sort of two models, if you will, for BNPL or embedded finance. The first is sort of the model that we've been enabling with banks and merchants, where we essentially, our platform sits on top of the bank's APIs. Today for EMI primarily, we are also building a fully native SaaS platform for pay later for banks, where you can offer this to any merchant as an embedded branded journey, you know, both prior to checkout and at checkout with the right personalization, right? So that's sort of the commerce embedded journey, and that's sort of what we classically think of as BNPL. And then there is the other journey, which is the app plus card journey, which a lot of new issuers we've seen explode, like Uni, Slice, Postpay, One Card, and others have sort of, you know, been empowered by the prepaid rails that, you know, infrastructure platforms like Hyperface, M2P are offering. I think both of these are going to be models that exist, but we have to understand sort of what is the use case that matters for each one. What we are seeing in the market, right, is in the case of BNPL or Pay Later, large marketplaces like Flipkart, Amazon, who are our partners for EMI and very good partners, for this product, they want to have only first party, which is their data to underwrite in partnership with a white label bank player, infrastructure player. You are seeing that with Zomato, you will see that with, you know, a few of the other big tech players, right? Today, the scale is really small. For all the talk, right, the scale for even a Flipkart, Amazon of the number of lines approved is very small. I should just clarify that. And the reason is because the lender at the back end, which is a bank like IDFC or a NBFC like Aditya Birla, cannot scale to the appetite of the brand, a single lender, right? So that will go through evolution. I think that we are going to see a number of we're going to see a bifurcation in merchants and brands, The large folks who have real brand trust and equity with customers, Apple, Flipkart, Amazon, Make My Trip, are eventually going to offer their own first party in partnership with other players. And we are seeing that movement already. It's embedded in the journey because the customer experience is really, really, really important and they have a lot of data on you. But there is the mass middle, right? Where they cannot, it's one thing to offer it. You have to be able to collect. When you offer this, you need a balance sheet and a regulated entity below that. A lot of those will offer third party, right? So we do see that happening. And then there is obviously UPI on the horizon. Once RBI allows credit over a UPI rail, the rail is completely commoditized. So the economics suddenly change, right, for the issuer. Today, the economics are card economics or cardless economics. They're actually quite good for an EMI product. Pay later a little bit less so. When it's UPI, the economics suddenly change. But that's what the customer wants. So how does that work? So I think we're in a transition phase still. We're still understanding what's happening.
Oh, great point, great point. Actually, taking this point a little further and focusing on brands, right? Yes, you spoke of some of the large brands, but you also have brands where there's a continuous engagement. You spoke of Zomato, for example. Other brands where you see maybe engagements at different points of time, if not a continuous engagement. So when it comes to new to credit and your experience with Hyperface as a platform, the surrogate data that gets generated, how can that be leveraged when it comes to underwriting, right? Because again, that's a shift from a lender perspective, right?
Honestly, some of the learnings that we have been truly amazing. It's just barely a year journey for us. We have double-digit clients signed up. One cohort that SD spoke in detail about is the e-com, right? There is clearly a sitting use case. You want to get the customer to use more. Some of our clients that we are taking live to is, right, one is a medical care reimbursement platform for employees of different corporates. What is the data that they are sitting on? They are sitting on your, what is the reimbursement limit your corporate is giving you? How much of it have you been using? And let's remember, there are always set of people who have heavy medical needs. It might be parents, it might be any medical this thing, but the brand has data. Now this brand wants to offer a pay later program which is reimbursable just for your hospital surgeries. The theory being your typical medical insurance coverage is not adequate. And that's something they are seeing. So they are saying, Aishwarya, I know these guys, I know where they are working, I know what their medical bills look like and what is their reimbursement also tells me their affluence. Because a lot of private companies, apart from the government medical reimbursement, companies like Google also give you Medicare benefits, right? Now all this data, when we take to a lender, an NBFC literally would do anything to have this data, right? And to qualify these customers, whether they are NTC or ETC, doesn't matter, because for this particular use case, which is restrictive in nature, you cannot end up using this credit line anywhere as you wish. So the risk gets mitigated therein. There is a network of hospitals that this particular healthcare provider has, where this pay later line will get used. So this was an interesting use case. The other use cases, they're all over the place use cases. As you said, it's a wave and boom right now. The wealth techs, right? The wealth techs today know the investments you're sitting on. For long, I think banks have grappled with credit evaluation, right? We are pretty comfortable giving money to the salaried people. But what about the gig economy? The whole Gen Z is based on gigs, right? There are people who work as event managers. Bankers don't even recognize professions like Instagram influencer. I had a client who manages influencers. It's a platform which manages influencers, which knows how many followers they have, what is the money they make every month, and they are like, I want to give credit line for these guys. I want to give a branded card for these guys, take me to a lender. Now this is where I would rather say these use cases driven pay later is actually here to stay, because conventional credit models have long not addressed them. And pay later becomes, as you said, it's a hack, right? It's a product which doesn't really sit. Let the regulation come, but I think it's again a need of the hour. It is like a problem that needs a solution. So there are multiple use cases that I see emerging like this, where, like I said, data becomes very critical, and how unique is that data? The use case, how tight or closed is it? Because that acts as a mitigant for the lender that, okay, this line is not going to be used for partying, right? And lastly, how relevant it is for your cohort of customers that that particular brand is serving. That's what I really strongly have started believing, that every brand should be a lending brand. You know, when there is consumption involved, when there is data involved, there is a potential to lend, and there is always, I mean, all of us bankers know there is a right risk. It's a matter of finding it right.
True. No, so I think great points, and I think there is innovation, there is embedding of finance, there is the customer experience. As much as that, and also the data getting generated, right, which typically lenders have not looked at. Yasi, coming back, your platform also looks at getting lenders, right? And you have a bunch of lenders, including Bank of Baroda, right? From your perspective, because as much as we talk of all these good factors, using some of these hypotheses and data requires a change, right? How have you seen that manifest with lenders? You know?
So, thank you. So, obviously, all lenders are not created equal, and we've managed to have a diversity in our portfolio from someone aggressive like IDFC First or Home Credit to more sort of blue chip players like a Bank of Baroda or a Kotak or a ICICI. What we've seen, especially the last 2 years because of the whole COVID situation, right, is that some lenders preemptively pulled back everything and just stopped lending in the first wave, right? Part of that was the government policies were a little bit loosey-goosey in terms of essential e-commerce, non-essential e-commerce, but also just, you know, the moratorium on repayments. So there was just too much uncertainty. And when the first sort of moratorium lifted, we saw some more traditional lenders that you would expect to be more conservative really aggressively try to grab share. So I think we see a diversity. In general, you know, the more aggressive ones tend to be the more aggressive ones, and then occasionally the portfolio blows up a bit and we see them pulling back. We work very closely with all of them. I'll just add one more point, you know, ETB versus NTB, because I feel like sometimes it's a bit of a religious discussion. See, the thing is that today I have 35 million cardless EMI customers from my banks live on my network, right? Now, yes, these are CASA, propensity issues, et cetera, The real challenge for us and our lenders is that 90% of them don't know they have the product, right? Banks' traditional channels of informing them just go so far. Now, the beauty of having a digital internet credit line is you are traversing the internet. So I can start doing some interesting things to try and just surface the fact that you may have credit when you're looking at a product, for example. So I think that kind of innovation, which is what I mean by embedding up the funnel in the commerce journey, is going to be critical in terms of thinking of the banks, right? Typically banks, it's an issuer-led model in credit. It's moving to a merchant-embedded and a commerce-embedded model. And eventually it'll be a user-on-demand model. The user will walk up to a product, whether in store or online, hit a button and say, show me my best options. And the merchant that offers that, hopefully using our platform, will succeed in building loyalty, right? In a personalized way, in partnership with our lenders, right? We are on that journey right now, basically. NTB is very powerful, but I should explain, in our experience, the vertical examples that Aishwarya gave make so much sense. We are more of a horizontal credit line, right? The challenge with NTB is that you can underwrite, and they are very credit hungry, so we see 40–50% conversion after approval for an NTB customer, which is phenomenal, right? Within 7 days. But their NTB journeys are subject to compliance and risk officers in each lender, and the problem is there is no standardization yet. Yeah. So we're working on that, and it's a journey. I think that eventually it'll be a 360-degree platform. Whether it's a new to bank, new to credit, or an ETB, you should offer the best offer or not offer based on your risk assessment in real time, as Aishwarya said. And you can simply click a button as a consumer and have that journey be seamless. Not go to the card section of checkout, enter a 16-digit number in your app and a CVV, see that it's underwritten by SBM, which you've never heard of because you're a Slice customer. That will change. So.
No, perfect, perfect. I think good points. Aishwarya, we did speak of the data that's getting generated, right? Underwriting and collections, I'll sort of look at both these, right, are going to be very critical. How do you see platforms like yourself helping lenders from underwriting and collection aspects, right? Because those are important sort of value chains of the entire cycle.
No, absolutely. One thing that SG rightfully touched upon is the standardization of underwriting, which today doesn't exist. That's why all these surrogate data comes in, and every lender has a different, what would I say, appetite for these kind of surrogate data. I mean, the bank to me sits in the highest because bank also has the luxury of serving 1 million customers who are needy and I know them versus needy and I don't know them. And needy is never good, right? Needy sounds a little desperate. But coming back to underwriting, right? As I said, we really believe in the power of data. We really believe in building surrogates and giving confidence to the lenders on the brands they work with. On the collection part, as we always say, collection begins before collection starts, right? Before you send them, if you have to send them a reminder check, trust me, your collection process has started. So to this extent, for the brands that we work with, we recommend them, don't even allow him to convert to an EMI. Let the first round of use happen on the first cycle, right? And what I hear from all these brands, I mean, especially on Pay Later, we've been talking to quite a few CROs and everybody. UPI collections have been super helpful. There is a lot of automation that has happened on call center and collections. Banks have not yet adapted to them. If you talk to, you took the example of Slice. I mean, I know AI-based couple of call center units which work with partners like Slice, and the collection cost is a fraction of what a traditional lender collection costs are, because this is not a model where you send someone home and collect. This is a model where it is voice automated. 30 DPD mein ek voice hai, 60 DPD the voice doesn't sound nice. Of course, all the analytics that we've been doing traditionally, right, day of the week to time of the month to time of the day to all those things. But I think when it comes to collection, conservative plus unconservative approaches are working. And engagement we spoke about, right? For instance, Amazon ICICI co-branded card. Apparently, if there is a default, Amazon has given a guarantee to ICICI that they can't come to Amazon and use it. Now, this is the power of the brand, right? It is going back to our street side shop owner example. That is a person I know. I don't want him to blacklist me. Look what a motivation it is to be for collection, right? So to that extent, the brands also come forward because they understand that this is a real problem for lenders. From an economics point of view, I mean, one example, this hospital use case I spoke about, he said, Aishwarya, I have a margin of 25 to 30% with my partner bank, partner hospitals on surgery, so I can bear the risk. So again, I mean, what works, works, right? As long as the lender is done good on the lending line. So I guess it will be different, whatever for different folks. But I guess the whole conservative plus unconservative is the way to go. And again, to me, everything is solvable with two things, data and technology at the right time.
No, interesting point. I think the entire value chain, right up to collection, needs a change if one has to play in this space, right? Yezi and Aishwarya, one quick comments before we sort of open to the audience as well. From an economics perspective, both of you did speak, right? How do you see the economics work for some of the large lenders, right? Is it about cross-sell or acquisition model, cross-sell? What's your thoughts, if I may say so?
Yeah, so this is very topical with some of the folks in this room and others of our lending partners. So pay later, the product that a Swiggy, or a Zomato offers, which is essentially a high-frequency, low-ticket charge facility, right, and zero interest essentially. So there are a few things here. One is to make it a banking product that can be offered by a bank. First of all, you have to address the no interest, right? How do you address it? So one of that, of course, we are working with partners and legal firms and our partners to come up with the opinion. The second is it's a small ticket product. It's a very sticky product, but it's a small ticket, high frequency product, right? And as Aishwarya said, traditional collections will just blow your cost structure out of the water, right? So it's got to be digital repayments, it's got to be automated, it's got to be AI based over time. Pay later can be, it is a thin margin product, but it can be run profitably. We've built P&Ls for some of our partners, we've shared them. But the way we look at pay later for a bank, right, is it's a massive acquisition and retention funnel for those customers, right? And the way to think about it is not just the transaction benefit, it is the frequency of re-engagement with the app, with the post-transaction journey, pre-purchase journey, the chance to cross-sell. PwC that has, sorry, one of your other players you work with has estimated that the cross-sell opportunity from pay later EMI could be as high as 30% for a bank, right? That is massive because an EMI is a much higher margin product, right? We've worked with Goldman. Goldman's done a report and P&L for both cardless and BNPL for India, right? So I think there is a product here. There are two things that are still problems why banks are going slow, rightfully so. One is the clarity around the regulation, right? I think the RBI has put a stake in the ground with the November position paper on digital lending, but it's not yet a circular. Yeah. But the direction is pretty clear, right? And the good news is banks are already following most of that. So that's one. Second is reporting, right? Standardization of bureau reporting. Today it's a mess. All the bureaus are working with RBI to standardize the reporting as a category. And the third is the P&L and profitability. A bank cannot burn lots of money like a VC funded startup, true. Right? So how do you build the business case for the board internally so that this becomes an entry-level mass market sachet size credit product, right? That's how to think about it. And a large section of those customers will be credit worthy. It's just that they don't have the buying power for a credit card product. But you can upsell them to an EMI line or a smaller PL, etc. And this creates a lot of stickiness with the lender. So that's the way we are encouraging our lending partners to think about it.
Aishwarya, your thoughts? And you could, if you could also touch, I think, Yazdi, you did highlight the regulatory aspects also, right? And so I think, Aishwarya, maybe your thoughts before we sort of open to the audience.
So when it comes to unit economics, I've been a digital banker in my previous avatar. When we launched India's first zero balance digital savings account, the way we constructed the P&L was pretty ruthless. If the customer walks to a branch, we charge the customer. Because I think this is very important because you're all in some way associated with digital. When it comes to traditional banks, our mindset is to serve the customer regardless of where they come. But if we remember that in a digital line of credit, in a digital product, they've got the benefit of a discounted product. If you're going to work on a traditional unit economics or usko idhar bitana kabhi nahi chalega. The GSFC of the zero balance savings account looked entirely different from the other products of the bank. And to me, that is the way to go. We cannot say, can I charge processing fee? I need to charge processing fee, as he rightly said, to cover your interest. There is a convenience to the customer. If the customer is your ETB and you're giving them a pay later line, the reality is the effort of doing KYC with another player is minimized for the customer. So when it comes to pricing digital products, both on the cost side and the revenue side, what I feel happens with traditional banks is we tend to price it like the brick and mortar product. The revenue is still a digital product revenue, and that's why the gap never gets met. I would say you should go bottoms up in terms of pricing this product. Otherwise, the unit economics will never work because this is sachetized credit. While it is great to talk about cross-sell and upsell, it is like what we spoke about the UPI data, right? Istri wala, dobi wala data ke upar kya cross-sell kar sakte hai? On a 3000, it tells me nothing. Yes, juxtaposed with other data you have of that customer, something meaningful can be built. But will this business unit be profitable in itself? I think should be a very ruthless hat to wear when you're designing for a pay later product. In a e-commerce enablement, there is inbuilt economics. There could be an interchange or an MDR that comes in. Where products that are lacking, I think customer convenience fee to banta hai, because especially at a certain cohort of customers, they will appreciate the fact that they've got a lending line on tap from their own bank, and banks should see, this is where digital is beautiful, right? You price 20 rupees today, it is not working. Next day you can experiment with a 5 rupee pricing. All your monolith bank systems, it will be a 30-day cycle to do these things. So do fast, iterate, but I'm sure there is a sweet spot sitting over there when it comes to your existing customers in terms of unit economics. Coming back to regulations, honestly, right, I mean, this mad gold rush worries all of us in this space. And especially, I think, I was just talking to the KPMG team and they asked me, but how does this happen? How does that happen? In any product, right, when somebody says, how does a credit card P&L work? We can go to RBI website, refer to a circular, and we say, put aside this much of your unsecured book, this much should be the government bond, this much should be the provisioning, this is what gets treated as NPA. None of that exists for pay later, and it is massively worrying because we also saw some NBFCs getting shut down with those Chinese lending apps and whatnot. One is, of course, the consumer protection part. Second is there is a systemic risk. I mean, thankfully, these amounts have not added up for a systemic risk, but one day it will. So let's all hope that there is guidelines around A, bureau reporting, 2, balance sheet management of a lending line, because the moment you give out a limit, it is a line that can be fully used. What are the balance sheet safeguards lenders have put in for that? There is no clarity on that. Thirdly, from a customer credit exposure point of view, what is the safeguard that can come in? See, while, I mean, I loathe to see it as an infra player, we might have to do things to manage this, but it's the need of the hour. If we all have to grow carefully with this, this needs to happen.
True. No, very valid points. Maybe we just go to the, yes. Sir, I think.
BNPL, when I understand, I'm trying to understand when we wanted to put together, the query is like, is it going to cater to only specific segment of the, or strata? You understood my question. Is it, we have got 12 crore SB account holders. Whom do we target? I have my next query is that I buy milk where I pay in advance. I load the wallet, I am going to, without wallet, he will not deliver. Now, this kind of segment, where no, this wallet kind of, definitely the cost is much higher than the Amul kind of one which are getting delivered. How these things are going to work? Right. I hope my query is relevant to BNPL.
Yes, I think I've got the gist of it, sir. I think that it's what Aishwarya was saying earlier, right? The lender or the bank has to be very clear what is the objective of launching this product. If you do not define your objectives clearly, then you wind up doing a khichdi, basically, right? And we are seeing a number of banks doing it. There's a FOMO in the market because of the craziness with the fintechs. So I think the first thing is to define the objective, right? And that also sort of what is the limit and exposure, the average credit line size that the bank is comfortable with, right? That is then tied to use cases, right? In our case, since when we work with BOB, we are an open line, you can block or whitelist or blacklist MCCs, right? So again, that comes back to your risk or the use case you want to enable. So I think it will differ by lender. You might even have multiple BNPL variant segments inside your own large base for different use cases. And that will make sense for as diverse or as large a base as a BOB, for example.
See, the question is, if I am going to offer to my own customer,
right,
blocking MCC is going to arise, or I have to have more trust and identification of the customer has to be right?
No, I think that we are in an experimentation phase with this product. So I don't think it's a one and done kind of product. You will start with a set of safer use cases, see how customer cohorts are behaving, open up some more. And if you see a certain stress in a cohort or a part of the base, you might block those or you might issue certain. The good news about a digital platform like Flex Money or Hyperface, in the case of card for Hyperface, is that there are all these controls built into the platform. So you can quickly change on and off, turn on and off categories, specific merchants, limits, maximum transaction size per user, etc. So you have to experiment, and the beauty about a digital infrastructure is you can run multiple experiments in parallel, right? You don't have to run one experiment, wait for 2 months, then run a second. You can run 15 experiments in parallel and then switch most of your cohorts to the winning variant, basically. So that is something we can work with you on, but that it requires the mindset she was talking about. It's an internet mindset, right? And it is an experimentation phase. Each bank has a different propensity base and a credit cohorts. And you will learn, obviously there are common use cases, but then as you expand, let's say you want to offer elective surgeries, for example, slightly higher ticket, but or wellness, spas. These are actually pretty popular, but should you open that up right now or should you wait? So it's a journey you'll have to take with the customer.
I also think with a larger bank like yours, it will never be a one answer, because there will be a set of customers who are NTC. There will be a set of customers who are NTCC. Now for an NTCC, a credit line is fantastic. And there are a set of customers who have those boring 16-digit credit cards who might want convenience. For somebody, it becomes the credit line which is attractive. For somebody, it becomes the checkout finance that's attractive. Instead of pulling out the card and paying. That's why in Hyperface, we say that we are form factor agnostic. Launch a pay later product. Ledger, right? Who needs a 7-day credit, 15-day credit? Because a 30-day credit is such a salaried mindset. Especially if you have a whole lot of self-employed professionals, they are happy with 15-day invoicing, right? So why don't we create a pay later product that's tailor-made for their requirements? So I guess that whole slicing and dicing of your customer segments become important, and identify what is that single value prop that will stand out for them. There will be a set of premium customers. I saw a Bob Gold mobile app. Then I'm assuming there are significant amount of affluent customers for whom a flex money solution at a e-com is fantastic. That's your way of bank ensuring there is a credit line. But somebody who is more, starting off with a credit journey, a very, very low-end version of a credit product, you might have to approach that segment differently. And as he rightly said, keep experimenting and iterating. And even when you're choosing stacks, I would say that is a key flexibility, that can I run multiple programs? Can I define limits? I mean, you might want to say, okay, this product sounds great, but I don't want to give out more than 2 crores. Let me see how it behaves, maybe pause it and restart. So even for our own current clients, we tell them, come, it's great that you're thinking of this use case, but get started with a small amount of money, learn and reiterate. And as you rightly said, reiteration is not some heavy duty back-end thing anymore. It's all front-end touches and dashboards and programmatic with players like us. So I would say one size won't fit all. We should be ready to experiment. We should have the flexibility and configurability in the systems we build to allow us to do that.
So what we feel is... I think if you could have the mic. If you could have the mic, sorry. Oh, you had a question? Okay, sorry.
See, what we understand with the BNPL, which is at least my understanding, is that people who are using is either new to credit or new to bank. The older people, and they are not using for 1,000 rupees ticket size or 5,000, 2,000 ticket size. So a bank like Bank of Baroda, how they can take this entity or this group into this BNPL space, because where the volume is, and there is no bureau support or, you know, and typically what we say is simple, and others, they are giving just based on the mobile number or something. So how we can go ahead in this?
So I'll say something. So the stereotype of the BNPL consumer is a millennial consumer, right? Who downloads one of these apps, has probably 3 or 4 on their phone, uses it at all the food ordering, groceries, entertainment. But that's not always the case, right? When BNPL is embedded in your favorite merchant journeys or your favorite brand journeys, the consumer has a relationship regardless of age with the brand. The key is to make that journey frictionless, right? And that is where the commerce embedding journey becomes really important. So I would say that yes, stereotypically, the BNPL fintechs that have launched apps with a card, they are targeting the millennial or the urban professional or the student market. But there is a whole class of consumers that are using checkout finance at Swiggy or other or Flipkart or Amazon that are not necessarily in that cohort at all, because they have a trust relationship with the brand or the merchant, right? So that's number one. Second is that BNPL, as I said itself, it's a little bit of, everyone has a different interpretation of what it is. To me, it's a spectrum of credit purchase scenarios, from small ticket charge facility to micro EMI to even a consumer finance loan in a journey, right? It depends on the user's ability to repay and your underwriting and ability to extend that credit. So some users will migrate to a bigger ticket type BNPL scenario, and they will use it infrequently, more like an EMI. Some users will take the Amazon Pay Later or the Flipkart Pay Later that is offered because they have such a strong relationship with that brand, or Apple or any of these other big brands, right? And the challenge here is that in a lot of cases, we have not done a good job as an industry of being transparent to the customer that they are now taking a credit line. And in the case of the relationship, while it's with the brand, the credit line may be underwritten by an IDFC First underneath or an Aditya Birla. And that has caused a lot of heartburn in the market recently. So I think that has to be corrected. But I don't think that we should assume that it's only younger people. I think it is going to be part of how commerce is expected to be done by your favorite brand, if they offer you the best option in the journey.
So here I would just
Yes.
Okay, yes, there is a category who
Right.
is ready to buy the standard one.
Can just use the mic, I think.
Okay, thank you. There is a category, those who are standard and using the 6 months EMI, 9 months EMI, 12 months EMI. But there is this category, but young, and then. So how to underwrite? How bank underwrite that?
Just two things, right? I also think, don't get me wrong, I feel the problem with banking is that we go for straight-jacketed, defined solutions. All this innovation that we spoke about on Pay Later has been led by fintechs and whatnots. They've not gone by the rule book. It could be bad, it could be good. To me, the discovery of where the credit line is available is actually most important. If you look at global platforms like Klarna or Affirm, they've built the whole thing around discovery. You see a fantastic handbag, which is 30,000 rupees. How is the affluent customer going for the credit line? You nudge them nicely saying, yeah, the handbag is 30,000, but it's available at 0 interest EMI for 6 months. Ho gaya, wo 5,000 handbag person is now shifted to a 30,000 one. This is where that intuitive journeys, I'm coming back to that. Let's just take a simple example. This just came to my mind. How many bill users in Bank of Baroda today have set up an auto pay? In a city like Mumbai, our power bill is anyway 3,000 rupees and upwards, right? Any such utility bill, the BBPS or whatever facility, can we convert that into a credit line? Can I tell the customer your auto pay is due on 6th? I think this is the layer that banks are missing as to where do I, kidhar gusu? Which is why we are leaving out the space for e-com players on the table, right? I have the customer transaction data with me. I know when the customer is going to come to my mobile app. I know maybe some of the banks, I'm sure you also have your predictive analytics going on to say what is the next big product for this customer or any such thing. How are we using all this intelligent data to nudge the customer at the right time? Coming to underwriting specifically, I don't think you'll have any more data than a ETB customer, right? Long back for 3 years in HDFC Bank, I was only building campaigns for ETB customers. So the amount of data, I'm talking about 2006 to 2009, I'm sure now it's all the more sophisticated, right? So much more cleaning up, and I think that's the starting point. A customer who's inactive with an AMB versus a customer who's doing 8 UPI transactions. That 8 UPI transaction customer is giving you rich data that needs to be mined. How well we mine it is the underwriting. To me, somebody who has done an auto pay every 3 months religiously is a great credit risk guy. He shows that ability to come back. He has given you, trusts you enough with the data of his bill payment. Maybe that's what it goes back to the cohorts we spoke about, right? Who are our highly engaged customers today? What is the data that I have of them? Again, maybe we'll say, I think maybe we're setting a roadmap sort of thing. Well, how much of this is NTC, NTCC, premium? Premium might find it great. This 5,000 handbag versus 30,000 handbag is the example for your premium. Every premium has a limit. No, nobody is Ambani. Nudge them to the next thing is what the key would be there. I guess profiling the customer might just be the answer, and being intuitively there in the right digital journeys for them and getting them to opt for a pay later might work. Just my 2 cents.
Thank you.
No, thank you. Okay, we probably, we're significantly out, but we'll just have one quick question. We're significantly, I'm told, significantly out of time, but just...
Thank you. Thank you, sir, for giving me the opportunity. I have actually 2 questions. One is, India is a country of more than 140 crore population, and we know that through BNPL, we are going to target a whole gamut of population through a smaller ticket size loan. Whether you foresee that this smaller ticket size loan, as we are calling it as BNPL, these are going to take over all the other retail portfolio which banks are right now have in their bouquet of advances. And the second question is, BNPL, as we know that we have been learning from the West, US or European countries. How the BNPL is exactly performing in this West and European country, including the recovery procedure right now, and how we foresee that it will work in India, and including the post disbursement of the loan and recovery part also.
Yes.
So let me just rephrase the question. The second question was BNPL in other markets. You've got large players who are now under stress in Australia and other markets. Australian BNPL stocks have been slashed by 80%. Just it was too crowded. And how does that play out in India, for example? And then you have, I think the other question, if the market as big and diverse as India, do you see BNPL eventually becoming the dominant retail credit product? Did I get the questions right? So let me address the first one. And as I said, we are on a journey. We are still in the first innings of that journey. And honestly, when I started Flex 25 years ago, I had a thesis about how it would play out. Some parts of it have played out exactly that way. Some parts we were surprised by. But I do believe that this category is here to stay. This product category as a banking product is here to stay. It may have different names, khata, whatever you want to call it. Each bank, and this is, I think, to the earlier question from Anand sir also, each bank will have to define what is your objective for launching BNPL, to which cohort, for what use case. If you do not define the business objective very clearly, you will have heartbreak because it's a thin margin product in India, right? So the objective could be retention. The objective could be upsell, cross-sell. The objective could be, customer stickiness, or, some or all of the above, right? Or getting the new generation as customers of the bank, for example. That each bank will have, we can work with you, but obviously this is a business objective. The board will approve it. The other piece in terms of the economics, we mentioned this earlier. See, in markets like the US and UK and Australia, Western markets, the average interchange or MDR that the BNPL lender earns is anything from 4 to 8% of the transaction value. So it subsidizes no cost. It subsidizes a very significant margin play, right? Secondly, the friction for underwriting in some of these markets is significantly less because everyone has a social security number. With that and your date of birth, you can pull out the bureau report. Everyone has a bureau profile. So, you know, the experience of a Klarna or in a firm is just magical, right? It's like 2 things and boom, you got a loan. That doesn't exist in India, right? I think digital KYC, we all know this friction, e-sign, all that. And the economics don't exist. So a lot of the pure play players you've seen in the market, you know, your Simple, LazyPay, Zest, are now feeling the margin compression as the portfolio, you know, as far as the number of issuers explodes. So commoditization of margins has already happened. But second is, it's not a standalone business if you're just going to do that. It is always part of a larger portfolio or a bouquet of products, which is where a bank has a lot of strength. The way Bajaj has used consumer finance as a flywheel initiator for upselling other products. So that's how I would think about it.
Wonderful. Thank you so much, Yazdi, Aishwarya, thank you so much. This has been a very engaging conversation. As much as we are seeing innovation at the customer end, the merchant end, I think there are certain things that we as lenders also have to tie up, right? And the point that was made in terms of where is it that we want to focus, what sort of customers, what sort of journeys, experiences, cohorts, and what sort of risk are we sort of willing to underwrite, and how are we proposing to use this maybe as a flywheel to kind of cross-sell, upsell products. So thank you very much. This has been an engaging conversation, and thank you very much for a very patient hearing. I think some very good questions. We could take more, but Yazdi and Aishwarya, on your behalf, I think they're here for some time. So I think there could be more interaction. But thank you very much. Thank you for having us.
We are going nowhere. You can add me on LinkedIn and ask your questions as well. Thank you so much. I mean, such a distinguished panel. Thanks for having me here.
Yes, thank you for.
So big round of applause, ladies and gentlemen. Our moderator, Mr. Amit Wagh. So thank you for rightfully steering the discussion. And our panelists, Mr. Lashkari and Ms. Jaishankar. So now I would request our General Manager, Mr. B.S. Sitaram, Head Digital Platform and Products, Asset Sites, to please come on stage and felicitate the moderator, Mr. Amit Wagh, and our panelists, Mr. Lashkari and Ms. Jaishankar. Ma'am, so please, if you could come on stage. So thank you very much.
Thank you.
So I would request Mr. Sitaram to stay over here, because the next discussion that is coming over here is the preview of Head Digital Lending Products Pipeline for financial year 23. Now, as they say, what we do in present is something that defines our future. And when we see the product launches that have been done in the last 2 days, so if someone can enumerate the different products that we've launched. You all have been to the product launches, right? Okay. See, I'll tell you, Bob World Gold, Bob World Wave, and Digital Co-Lending Platform. So these were the three products that were launched in this Bob World Digital Conclave 2022. So when we see this different products being lined up, you know, it really makes us feel excited and also proud that we have, we are getting our product suite stronger, and we are also increasing our spectrum in the digital side. And after seeing the present that we have, it really excites us to know what is there in future. But obviously no one can predict the future, but we have someone who can surely reveal the future. And the person is none other than Mr. B.S. Sitaram, Head Digital Platform and Products, Asset Side BOV. So the next set of insights are coming from the person who has spent 24 years in IT and banking. He has overseen the management of various software applications and IT infrastructure, including data center. He heads the Digital Products and Platforms Group, wherein presently he and his team are working on creating various end-to-end digital STPs and in-principle journeys and making them operational. Since inception of Digital Lending Department, he has successfully launched 5 digital retail lending products consisting of 20 retail journeys, 7 MSME and agri products, working out to 19 MSME and agri journeys, in addition to several more innovative digital journeys. To give us a preview of the bank's digital lending product pipelines for financial year 23, please welcome Mr. B.S. Sitaram.
Thank you. When we build this digital lending platform, it consists of the architecture design. We have created a system which can take care of next 5 years. So the architecture, it went, a lot of inputs have went into while we have created the architecture. This is, it sits in our data center and DR site. The platform, the architecture, business process management driven architecture with more than 100 internal and external integration touch points with more than 10 fintech partners. When you understand fintech partners, sir, we are talking about like a bank statement analysis or a CIBIL. These are the fintech partnership we have done. And when a product design actually happens, how does we PL journey we have created? First of all, we call it, first of all, you have to thought through what you wanted to do, how you wanted to complete, create the product. So first of all, we create a wireframe. Actually, how does it looks like? How does the product finally, when it comes out, how does it looks like? We create it, and there is a rapid prototyping, then click analysis. How many buttons? See, sometimes when we started the journey, the failures were so large. Customers used to drop off. Then we have done an extensive work on that to see that how do we minimize the number of clicks a customer is supposed to do. Then we call it a click analysis, the visual design and the product development and the testing, the kind of testing it underwent. Still after undergoing so much of testing, we have certain kind of operational issues at the beginning. Now the product is fairly fairly stable. And most of you know what is the STP journey. STP journey is that you must be knowing that very few public sector banks have created the kind of products we have created. How many of you know that today somebody can go to Maruti website and buy a car and he can select Bank of Baroda as the financier? And similarly, we have done with a integration with Hyundai also. So these are the STP journeys we have created. And the STP journeys, and one more thing, the loan account creation, automated loan account creation, automated disbursement, these are the processes initiated within the Bank of Baroda as part of the digital lending journey. And we have created a 24/7 support to defined SLAs for the resolution of the issues and changes. We are fairly good, and today people, Bank of Baroda team along with the vendor team, we monitor and manage the system 24/7. Please, next. The architecture design, and this is what we have when we started the journey. We call it DLP phase 1 and phase 2. We have done only one platform with 5 products and 8 fintech integrations. Now we have 2 platforms with 12 products and 10 plus odd fintech integrations. See, when external fintech, so you must be knowing that the digital lending platform, geo-race, bank statement analysis, we do PAN validation, e-sign, e-stamp. I think yesterday also it is communicated to all of you. We are the maximum e-stamping we have done, and ITR, credit rating bureaus, we do e-KYC, GSTN, e-mandate, video KYC. These are the external integration. The internal integrations are LLPS, BDMS, and CBS, FRM, AML, HRMS, pre-approved database contact center. You know why do we do HRMS integration? When a journey customer starts, whether we have to identify whether he is a Bank of Baroda employee. And if it is a Bank of Baroda employee, what are the, how much to lend through this process. So we have done a HRMS integration, then a pre-approved database. Pre-approved database is one of the most complex. I have been working for the last 20 or more than 20 years in the IT. The creating a pre-approved database is one of the most complex subject I have seen. It is that decides about our lending journey in the coming days. And contact center integration we have done in case the customer drops off. Within no time, I think he gets an SMS and communicating why don't you initiate a journey. If he is not, we call it nudges. If that still doesn't get through, there is a contact center calls the customer whether he has got any technical difficulty in proceeding with the journey. These are the kind of thought underwent when we have created these digital journeys. Please. And the integration touch points are like mobile authentication. Everybody know the customer starts, we have to identify the customer in the especially pre-approved journey, you have to identify, otherwise in the NTP journey also, the connect between the journey and the customer will be the mobile authentication. Then you know, most of you know what is ETB, NTB. If it is existing to the bank customer, if he has got a pre-approved offer, if he doesn't have a pre-approved offer, then we facilitate him to continue the journey by taking his bank statement. We do the analysis whether an offer can be given or a sanction can be completed during this journey. Then customer demographic details, we do customer demographic details. 1 minute, please. In the customer validation, we do eKYC, customer inquiry of the Finacle, account inquiry, dedupe we check, and customer details we do PAN, HRMS that we have discussed. Employment details also we check. Then we check the CBS extraction to see if it's a ETB customer, we try to extract, we do the bank statement extraction for doing the analysis. And we do legal hair. These are some of the regulatory compliance related to legal hair, FATCA related details, we take it. And we have created RM assisted KYC validations, video KYC validations also. When I'm talking about the journeys which are going to come, these are the blocks we have created. Each block, when at the front end, only you will see customer touching one particular point, and whereas behind quite a lot of activities done. quite a lot of activities. You must be knowing that today we do lot of complaints, we receive it. Customer का पूरा e-stamp नहीं हो रहा है. Sorry, e-stamp हो गया, e-sign नहीं हो रहा है. Why e-sign is not happening? Sometimes the customer started his journey, he tries to e-sign using his wife Aadhaar number or somebody else's Aadhaar number. So when we created these journeys, you have to be doubly sure that the customer is the person only completing the journey. So you need to understand, and it is very much important what is we are going to communicate to the customer. So some of the internal to the bank processes, what we have to do behind, we will be doing during the journey. Then the loan account opening, disbursement, post disbursement also, we create the whatever documents. Yesterday there is a query from the board. Okay, you have created lot many digital journeys. You say that 2 lakh personal loans you have disbursed. If a loan goes for any kind of default, where are the documents? How are you preserving it? So you can check it up. If a loan is created, go and check in your BDMS, the customer completed journey related documents, you should be able to check it up. So the post disbursement activities are also, we are doing it. I'll be going to be little more quick for completion, because there is a few more presentations are there, and this is what the completed journeys we have done. I have talked about personal loan, we have done PAPL, PL for the NTB and ETB. We have, you must be knowing that we have got, we call it DLP1 and DLP2. DLP2 talks about the end-to-end journey, STP, loan account open, and up to disbursement. We have created some of the journeys up to in principle. You must be knowing, very recently we have done gold loan journey, where in the gold loan, there is some kind of doubt among the apprehension. What is that a gold loan? Why are you creating a in principle journey? What is it required? Actually, after creation, the success started, the loans we are started dispersing in the gold loan. Otherwise, it was never thought that a gold loan journey is going to be any useful. But basically today, customer is coming, he gets the in principle sanction, and the same customer communicate that you go to the branch, because gold loan means he has to pledge the loan into with the branch. The branch will be able to complete the re-verification that data and the sanction letter, final sanction letter is going to be given by the branch, and the remaining formalities they are going to complete in terms of the documentation, all that. And we have done a loan against FD, Swanidhi. I think when we have started the PM Swanidhi, we have done a end-to-end journey. Mudra loan, most of you know that we have created all Sishu, Tarun, Kisho, all the 3 journeys we have done in the Mudra loan also. And MSME, right now working capital loans up to 5 crore we have done. Gold loan I have already explained. BKCC, regular sanctions we have completed, and we are doing the renewals now. Co-lending, yesterday we have launched it. Co-lending currently we have done for the secured loans. We are going to create unsecured loans also. Co-lending, most of you know what actually happens. I'll take only 1 minute of a co-lending. In the co-lending, there is an NBFC is involved, bank is involved. NBFC sources the customer, they complete the complete assessment, appraisal complete करके, then they sanction letter देता है. I am talking about the future is going to be option 1. We call it option 1 and option 2. We are going to go with the option 1. In the option 1, what is going to happen is that once a sanction is completed, whatever the document collected by the NBFC through this lending platform, they send it to bank system. The bank system completely reassess. The appraisal is completed again as per the co-lending mechanism drawn between the NBFC and bank. Whether NBFC has, while sanctioning, have they stick to the same parameter, the same process. Once that is completed, then if it is a secured property, then our legal vetting, valuation related documents also to be verified. Then subsequently, we will do the loan account open and disbursement. In this case, bank will be doing 80% and NBFC will be doing 20%. This 80-20% will be will be remitted to the customer. Subsequently, the mechanism, the co-lending platform is created to ensure the collection management also. When the collection comes, if it is 100 rupees is paid by the customer, 80 rupees has to come to the bank loan account and 20 rupees has to go to the NBFC. When we have created that journey, we have created this end-to-end process in the co-lending. And the new process, very soon you will be knowing this, we will be initiating education loan. Very soon we will be releasing the circular where we call it pre-approved. Pre-approved means the institutes are pre-approved and there are non-pre-approved. Here the education loan journey, whatever, where collateral is not required, only such kind of institutes are currently identified. Top 360 odd universities are identified and non-collateralized education loan. What is that? That means there is no security requirement for this education loans, whatever we have done. And the auto loan journey, I have explained to you that today a customer can go to Hyundai, customer can go to MSME portal, complete, identify, then there is a sanction happens at the Hyundai and MSIL site. Subsequently, the documents flows to the Bank of Baroda system. And currently what is happening is that the sanction remaining disbursement process is manually completed in the LLPS by the branches. We have created an auto loan journey. Auto loan journey has got, I think when the next screen comes for the auto loan, I'll run you through. And we have, now BNPL, you have heard about it, what is BNPL right now, what is it all about. Digital education loan, ETB, NTB, then co-lending, as I said, we are going to do MSME unsecured home loan, equipment finance, microfinance, BKCC, we are going to do up to 1.6 lakh STP. There will be straight STP. Here we are going to integrate with the agri fintechs also to identify the land records, verify the land records. That is how the end-to-end journey up to disbursement can go in the BKCC. Then the loan against securities, account aggregator. I think you heard about the account aggregator in the morning also. We are right now, customer is has to upload the, if it is a new to bank customer, he has to upload the bank statement of his current bank. Now once account aggregator integration completes, with the consent of the customer will be able to fetch the bank statement. Then the pre-approved database creation for retail and MSME. Right now, sorry, the pre-approved database is available for only personal loans. Very soon, right now the entire database APIs के साथ integration testing चालू किया है. It will have auto loans, BNPL, other products also we are going to create for the MSME also. We are going to create that pre-approved database. The structure is ready. Now, right now, we have initiated the testing. Then assisted digital journeys for the branches and DBUs. You must have seen in the PL today, the journey starts. There are cases where e-sign is completed, e-stamp is completed, e-sign is failing, our customer is stuck at one place. Now, we have created the assisted journeys. Within the assisted journey, if the drop happens anywhere, if the customer comes to the branch will be able to initiate and complete the journey through this module. That is what we have started working on it. I think it will be very soon will be made available. You heard about the DBUs, so it is the government initiated. Currently, I think 75 DBUs are going to be created in the phase 1. So the DBUs related journey, wherever the product requirements are there, we are working on it. The retail key products are personal loan. I have already discussed ETB pre-approved, ETB non-pre-approved, NTB, auto loan, dealer assisted journey, RM assisted journey, and customer self journey. And in the education loan, pre-approved institutes, non-pre-approved institutions, and EDP, I think Executive Development Program, if I am right, that is and home loan, pre-approved home loan top up, and approved properties till sanction. This is going to be one of the key changer. Today, if a customer already having a housing loan and he has repaid, and let's say based on the repayment period, based on the principal whatever he has repaid, we are going to create a journey. That amount he can again avail it as a loan, and it will be end-to-end STP journey. Similarly, pre-approved properties, you must have seen, you go in the market, you see there is a property available, and some of the banks pre-approved by XYZ bank, ICICI bank, all that will be there. Now, that kind of pre-approved property we are creating as a digital journey. Within the digital journey, what is going to happen is that the entire inventory for a pre-approved property will be available part of the database. Customer can come into the journey, and currently HL up to in principle sanction kind of process is there. Within the same, we are integrating where customer will be able to select the pre-approved property. If the pre-approved property is available, the bank can give a regular sanction to him. Now, only thing is that in that particular process, we may have to do TSR, we have to check whether that property is not still unsold property or not. Once that is completed, then the branch will be able to complete the remaining documentation. So this is we are going to create. And while we create all these products, pre-approved products, credit assessment and limit computation for the pre-approved offers will have, see, bank has got 12 crore odd customers. The entire savings account database, we do multiple filtration related to predefined eligibility parameters, demographic, bureau, savings account, all that. Once we do that, so there are multiple filtrations completes. Then finally the limit computation, the limit assignment based on the average credit balance and the bureau score. When we have 12 crore customers, we end up after doing all these filters, maybe 60 to 70 lakhs in between. It will be keep on varying. It will be keep on varying. That is the every month we have a pre-approved database of that kind of customers will be coming to. Please next. And I have already told about the gold loan. I just wanted to tell you the success what we have done. Gold loan we have done 6.83 crore disbursement, that is the amount, and we have done BKCC new sanction. We understand that percentage of the BKCC accounts collateral is needed, break in journey because of the mortgage creation journey till in principle we are going to do. I am repeating, I will be little more fasten my presentation. BKCC new sanctions we are going to create up to 1.6 lakh. BKCC renewals also we have started. It will be going to be STP journey. And Mudra loans STP journey till sanctions for all variants. Sishu, Kishore and Tarun journey till sanction is already live. And MSME renewals till 10 lakhs. Number of accounts already reviewed is 1 lakh, work in progress to extend it to 1 crore, and MSME till in principle sanction 12,139 cases sanctioned till now, and we are talking about Swanidhi loans 3,41,572 cases disbursed. Please next. Here, what is the difference between a, yeah, please 1 minute. Here, what is the difference between a physical and digital? So this is what we do in the digital first and STP first processes. Pre-population of the requisite applicant details, data triangulation through digitally verified data sources, digital data enrichment scorecards, 1200 plus digitally verifiable data sources for the loan sanction, behavioral nudges for the, I have explained about SMS contact center based on the operating model, instant disbursement directly to the applicant's primary account, assisted digital journey in case of constraints through 200 press. In case of any, if the journey stops for any reason, take the assistance of the 200 plus DLCs to complete the journey. Please next. So we have discussed about the PL already, pre-approved, and all of you are aware of the PL. Next. So in the journey, we have talked about these are the pre-approved lead generation, then pre-lead generation, pre-approved offer goes. Because it is a pre-approved, there is no income verification required. Then credit refer condition, in case if there is a address mismatch, we do that. Then disbursement, e-mandate, e-sign. Sorry, I'm coming in the reverse way. Final sanction, video KYC, e-sign, e-mandate, and disbursement. This is what a pre-approved journey and consisting of, these are the blocks. Next. For a NTB, in the NTB case, the difference between the pre-approved and NTB is, in the NTB case, we have to do the income verification. That block is selected. So we do the income verification in the case of non-pre-approved. So in the auto loan journey, we have talked about there are 3 kinds of journeys are going to be there: RM assisted journey, self journey, or dealer assisted journey. In this case, we have created the entire model for margin collection also. We have integrated with the payment gateway for collection of the margin also. In the difference between dealer journey and self journey is, in the case of dealer journey, dealer is going to confirm that his margin is received. Only pre-approved dealers will be there to verify that. And similarly, we have in the entire auto loan journey, a customer selects Maruti, Ciaz, a particular model. We have created a database to verify for the current month whatever price, whatever the quote customer asks, we pre-verify it. After that only the journey will be completed. Yeah. I think process flow for the auto loan journey we have discussed. Digital education loan, as I discussed, we are doing a pre-approved institutes. In the pre-approved institutes, there will be tab leke, our own employee can go to the institute at the time of disbursement, and he will be able to complete the disbursement process, wherein because he is with the student, he will be able to verify his admission process, everything, and we have done a biometric authentication also for the customer, so that KYC completion will be completed. Similarly, for the non-pre-approved institutes, there is, in this case, student may be talking about the first semester, his fees, all that. So that is why we have currently created the verification process through our RM. Or in case self-journey, it goes to CPC for the verification. And we are requesting the branches connected with these institutes, if they will be able to create the entire education master, more automation can be brought into the system. More automation, the first year, the semester, the fees, everything, if it goes into the master, then the verification can be much more, and the journey can be less friction. So the whatever we have discussed, the blocks only we are displaying. And in the case of agri journeys, building agriculture loan journeys still in principle, enabling Baroda Kisan platform for NTP and ETP customers, extending BKCC for the STP journey below 1.6 lakh, products and journey, new BKCC, ETP and NTP customer, agri gold already we have done, BKCC renewals currently we are working on it and it is under the testing stage. Journeys for applying for the new agricultural loans, BKCC agri gold loans, lead creation for the other agri loans. Pilot in 3 states are going to happen when we do STP journey: Maharashtra, Gujarat, Karnataka, where the land records electronically verifiable process is available. and subsequently once the pilot goes, it will be going for the pan-India. And process flow, because it is still not built process flow, we are currently working on for the less than 1.6 lakh, where we are, as I said, we will be going to avail the agri-tech support for the validating the, verifying the land records. BKCC renewal batch of accounts to be renewed in the next month will be identified, extracted from the CBS, upfront account filtration basis, criteria such as NPA and uploaded on the renewal platform, certain information as per the bank records validated by the customer, crop and land details given by the customer, land record fetched digitally are uploaded, bureau reports fetched, go no go is applied. If the customer has any other KCC loan going on from other bank, the case will be rejected. And subsequently, approval of the review renewal will be done by the branch, and the update of the details in the approval screen, checker review, compliance checks. I think MSME is, we have, as I said, Mudra Gen is already up and running, and we discussed about the co-lending. The structure looks like the co-lending structure, the multiple NBFCs and bank are integrated using a co-lending platform. It is already fully ready, and we have option 2 also. In the option 1, as I said, both NBFC and bank sanctions together. If both sanctions are successful, then the disbursement in terms of their proportional share, they will disperse. Whereas in the option 2, first NBFC disperse the entire amount, subsequently the documents are submitted to the bank for the bank to process, in this case, bank. Next. I think this is the overall how a co-lending entire architecture looks like. STP journey we have created, we have discussed about the Mudra loans and the Tarun Kishore. I hope if they, because of the paucity of the time, I am not able to run you through more. I have got lot many information to share, but there is a next panelist also waiting, okay? And we are available. Please communicate with us. Our mails are available. You have any time, any query, wanted any understanding, please talk to us. And I wanted to end my conversation with you. If we can only create, this can happen only with the support of the branch and the field staff. Otherwise, this digital lending platform automatically taking it to the customer, talking to the customer, make each and every branch staff, once they are aware of the process, the success will be more and more. And I shall tell you, we shall congratulate that Bank of Baroda is the first bank to create this kind of lending platform. No other bank has done this kind of end-to-end journeys, and you must have seen. Thank you. What is the time now? 12:30. Any of you have would like to have questions you wanted to ask? Otherwise, we are available all the time. Yeah.
Sir, when a customer stops midway during, suppose, a personal loan journey, so what bank? He goes to the branch comes to DLC comes to DLU, and then it's a very long process. That TAT is very high. So the thing is, sir, when we do online shopping, there is this, whenever we return a product, we have options, like kya problem hai. Like, why do you want to return, whether the size is different, or so if the customer could get some options, that at what stage he is stuck, like it e-signing, or the e-contract is not generating, or sir, he has changed his mind regarding taking the loan. So, and this response goes back to the support team, then they can call the customer and get the issue resolved. So this is gonna like really reduce the TAT. Instead of coming through the branch, they could directly, like through texts or any other means, like they could send the response directly to DIL support team.
Maybe in another 2 months' time, you will have the complete dashboard of the customers associated with your sole ID and where he is stuck, why he is stuck. All that information will be available to the branch directly. We call it assisted journey. We are building it. It will be made available to the branches.
But then we will have to call customers to branch anyway. And so most of the customers, what they do is, like, they don't come to the branch. Either they don't have time, or they are staying at a place which is different from their base branch. So this is an issue we are facing.
I'll answer it. Today, data quality is the issues. If a journey has stopped, if a journey is not continuing, 90% is data issues only. You know what is the data issue. You can correct it. And the customer will be able to see the switch between branch and customer can happen in the journey. That is how we are going to, if it is related to some data issues. For example, the date of birth in the Aadhaar number and core banking, both are not matching. And that stopped the, let's say, e-sign. You have identified.
So that can be changed.
You correct it, and the customer will be able to continue the journey. When I say that assisted journey, the dashboard will be available to the branch to understand why journey is stuck where. There is no requirement for the customer to come to the branch. But branch will have the complete visibility of each and every lead where it is stuck.
Sir, one more thing. So,
Did I answer your query now?
Yes, sir, fine. Sir, I was saying that from 1st of April, sir, to do MRCR, we are requiring R menu.
MRCR?
For doing any changes in MRCR, an R menu is required. So an R menu comes to the regional office for every MRCR to be done. So, and in PAPL journey, we always have to modify MRCR. Either there is a dot or there is a change in name, date of birth, whatever. So we process 100 PAPLs per day, suppose in a region. So we get 50 to 60 at least R menus daily. So which is not possible to handle, sir. It's gonna be a hurdle.
We have created for in the ETB non-pre-approved. In case of there is a customer data issues are there, KIF update related APIs we have built. Current concentration was up to March to push only pre-approved. Now whatever related issues you are talking about, no, we will be doing more and more testing. So where through the journey, if a data can be taken, I am talking about ETB non-pre-approved only, we'll be able to facilitate the KIF update through the journey. Otherwise, there are certain limitations right now because of the APIs available. There is, if I have to make one KIF related one parameter change, the changes has to happen at multiple places, multiple databases. So that constraint is there right now.
So rest of the questions you can ask sirs over here. We have a next speaker lined up, so you can ask later. You can talk to them.
Thank you all.
That was Mr. B.S. Sitaram, Head Digital Platforms and Product, Asset Sites, Bank of Baroda. Please give a big round of applause, ladies and gentlemen. Okay, we are about to start with our next session, and our speaker is present amongst us. You might not find him amongst us because he's not present physically, but he'll be live with us virtually. Now, in recent times, you've heard this statement which says, data is the new oil. Everywhere you go, they say that data is the new oil. But unless this oil is not used by the enterprises to launch themselves in the success, in the stratosphere of success, this would not help. In that context, If the data is not converted into information, the enterprises would miss out on many business avenues that might be derived out of this data. And that is where the role of advanced analytics or analytics comes into play. So how does analytics play and fit into BFSI sector? To explain that, we have the privilege of our final speaker, and this responsibility falls onto a very capable shoulders of Professor Ravi Vadlamani, capable and extremely scholar. A glance at his profile staggers the mind with the slew of qualifications: MS from BITS Pilani, MSc from IIT Mumbai, and a PhD which took him to Aachen, Germany. He currently spearheads the Center of Excellence and Analytics at the Institute for Development and Research in Banking Technology, Hyderabad. The institute is this first of its kind in India that, amongst other things, conducts customized training programs for bankers across variety of subjects. Analytics is the name of the game, and so this afternoon we have Professor Vadlamani to touch upon the finer points of advanced analytics. So big round of applause for Professor Ravi Vadlamani.
Thank you. Thank you so much for the kind words of introduction. Am I audible? Quick check. Am I audible, please? Am I audible? Can you please confirm?
Yes, sir, you're audible.
Oh, okay. Thank you so much. First of all, let me wish a very good afternoon to everybody, and thank Mr. Akhil Handaji for inviting me for this excellent digital conclave organized by Bank of Baroda. Quite unfortunately,
recording in progress.
Even though I wanted to be there physically, this was not possible due to unforeseen circumstances. Anyway, let us go ahead with our presentation. So I was asked to speak on advanced analytics use cases in banks, but then I slightly tweaked away from the subject, and then I will come back to this primarily because in all the service industries as well as academia, there is a lot of clutter and confusion with respect to the jargon that is flying around with respect to somebody says data mining, somebody says data analytics, somebody says business analytics, then somebody, as if this confusion is not sufficient, talks about data science, and then comes the rage in the form of AML. So then I thought, let me demystify this for the entire banking community within BOB, and then I will switch on to the advanced analytics, which are very exciting. Some of them are actually were scratched upon on the surface by Bank of Baroda in to some extent, but then some of them are really challenging but not undoable. But then I'll be actually happy to help the bank in the long run if that is actually permitted there. So with these brief words, let me show you the outline. I'll introduce data science from scratch very briefly. Then we talk about the unified theory that I developed, which combines data science on one hand, AML on another hand. Okay, at the end of the session, you will actually appreciate why actually they should be talked in the same breath. And then we talk about a brief introduction to its business problems. Then that paves the way for advanced use cases in the banks. We have some conclusions at the end. So now talking about the genesis or the nursery of data science, AML, everything, which is called statistics, where again, two flavors are there with respect to statistics. Which the first one, it talks about descriptive statistics, which is replete with presenting information, presenting knowledge in the form of information using pictorial diagrams. Even from high school studies, we all know how to plot bar charts, histograms, pie charts, box plots, scatter plots, and stacked bar charts, etc. Nowadays, people talk about heat maps and many more things. So these are all, the genesis is in descriptive statistics. The primary purpose is to figure out how we can depict the information digged out from the raw data that is provided in the lot of service, including banking. Then we go a step further, that is the bigger cousin of descriptive statistics, which is called applied statistics, wherein more intricate things like regression modeling, classification modeling, clustering, outlier detection, etc., are there. These are the primary, I would say, the backbone of applied statistics, and a slew of mathematical applied statistical models have been developed for about 200 years. Then we go further then there is a challenge faced by the applied statistical community from the computer scientists and machine learning community in the form that they said, okay, you have been, we give respect to your statistical models, but then the learning aspect, which requires a lot of computing, which is conspicuously absent in your models, therefore, we take the game forward. So that kind of unwritten race happened between the machine learning community on one hand, and then applied statistical community on another hand. So taking up this challenge, a new discipline has emerged in the form of computational statistics or statistical computing, wherein I will not go through each one of them, but then these are all the kind of, you can say, models developed by this computational statistical community, primarily coming from Stanford University and University of Berkeley, California at Berkeley. About 4 professors took up this challenge, and then the trend continues even now. As a result, what happened, we are seeing all these advanced models which have got the learning flavor, the machine learning flavor, as well as the statistical, basic statistics at the heart. So it's a kind of a very excellent amalgamation of both the fields, and there is no looking back after this. And then talking about regression, there are umpteen number of regression models, and as and when the, you can say, the complexity of the business problem or the operational problem increases, we'll have to look back at the basic regression models and beyond that, and you can see all this stuff is there. I will not go through this because of the paucity of time, but then in a typical banking scenario, one can come out with a use case where each of these regression models has got a fantastic application. Then now we switch the gears and talk about data. So data is now, the people say that data is new electricity, new oil, lot of metaphors they say. We give a new metaphor in the form of data flood. Because of the tremendous kind of data generation that is happening in all the service industries, including the BFSI sector, also scientific disciplines, lot of data gets generated in astronomy, biology. If we talk about e-marketing and e-tailing, web and text and e-commerce generates huge amount of data while the services are being offered. As if that is not sufficient, even within our own banking space, lot of user logs are created as and when a kind of financial transaction takes place. And then concomitant with that, we got a huge amount of geographic data, psychographic data, demographic data, behavioral data of the customers lying around in the bank, mostly, unfortunately, left untapped, you know. So I keep telling, sitting on gold mine or platinum mine of data. Then we have got social data coming from the customers' interactions with the bank on the web. And then because of the millennial customers who are high paying and then at a very young age, they can do the financial transactions right from bedroom to boardroom to even bathroom. So such kind of things are facilitated by the technology. But then where is this data going? Are we keeping a tap on such kind of data? Are we simply a kind of delivering only the goods and services from the banking perspective and then never bother about analyzing the data? These are all very important questions. And then we also have IoT data coming in, even in the form of agricultural banking, right? And then this particular slide lets you know that there is a watershed year of 2002 and 2003, where humongous amount of data was generated, and UC Berkeley estimated that 5 exabytes of data was created in 1 year alone. And naturally, without any guess, you know, easily people can guess that US was the chief producer. About 40% of the data worldwide was produced and consumed by US alone. And then unfortunately here, very little data will ever be looked at by a human being. Therefore, the genesis in the form of knowledge discovery in databases, that's the first step which took statistics beyond its realm of ivory towers into the banking, into the services sector, and then several words were coined, but then the people actually settled with a terminology called data mining to make sense out of the data. Now, this slide is also very important in the sense that this lets you know how the data science has progressed within the realm of science across the boundaries. You know, it actually transcends the boundaries of all sciences and engineering disciplines. Primarily, up to 1600s, mankind, whenever it started doing science, it was embroiled in only talking about experiments, hardcore experiments in the laboratory, and people called it as the first paradigm of science, also called empirical science. Then after a while, they said, we have been conducting experiments, but then how do we verify? And for generating new laws, you don't have to conduct experiments. So people came out with laws, then that is called the theoretical foundations of science or theoretical paradigm of science. So for a good number of 350 years, there is a symbiotic relationship between the experimental paradigm of science and on one hand and theoretical paradigm of science on the other hand. In some cases, they kind of collaborated with each other and then corroborated as well. But then in some cases, the theories refuted the experiments and experiments refuted the theories. Both the things happened. And then we got a lot of examples. Let us not go into the details of that. But then as if this is not sufficient, around 1950s, when the entire emergence of computing, then people shifted to the third paradigm of science in the form of computational science, which is distinctly different from earlier two paradigms in the sense that for some critical scenarios, you cannot afford to conduct experiments, number one. Number two, you don't even have the wherewithal to formulate solid, well-founded theories. In such cases, you cannot say that I cannot solve the problem. Problem will have to be solved. Therefore, the computing or the computer simulation came to the rescue, and that is the emergence of computational paradigm of science. Examples being molecular modeling. Okay, whenever a drug hits the market 10 years before that, molecular modeling would have happened to the machines where the candidate drug molecules would be identified by simulations, and only when they are suitable they are qualified through quantum mechanical computations, they will be actually put into the laboratory experiments, and then a lot of pharmacological experiments, clinical trials, everything takes place, then and then only it hits the market. Now, this happened for about 50 years. Around the year 2000, people witnessed the fourth paradigm of science, which is called data-driven science, which is distinct from earlier three forms of science, and now it has emerged as with the biggest form of science. And interesting thing is, they don't fight with each other. That is the beauty, okay? They actually complement each other, one another, and then science thrives on all the pillars of all the four paradigm of science. The other day when I was talking about data science to somebody, a senior professor said, what is science about data science? I could only lament about that the statement. Otherwise, I will have to show this slide and tell him. So this particular theory was proposed by Jim Gray of Microsoft, and then people actually kind of convinced with this kind of argument, so much so that CSIR, the Council of Scientific and Industrial Research in India, it has got one of the laboratories renamed from CSIR model, Center for Mathematical Modeling and Computer Simulation to fourth paradigm of science, fourth PI. You can verify in Bangalore, and you can Google it. So that is the kind of emergence of data science, Now, we just take a look at the data challenge that one is witnessing nowadays. In fact, for the last 20 years, on the x-axis, time is plotted, and the y-axis, database size is plotted. As the time progresses, the data content is generating at a rapid pace, equivalent to the exponential growth. However, if you look at the data utilization, unfortunately, it is moving at a linear pace. The question now being asked is, how do we bridge this yawning gap? Should we bridge this gap at all? Are we missing any kind of business insights in the process? The answer is tremendously yes. We are missing the things. Therefore, two important solutions are offered here. One is you need to have sophisticated algorithms to tail the data and get insights out of that. That is number one. And fortunately for us, world over now, people are relentlessly working to come out with the newer and newer models, which will actually churn out the deeply hidden kind of insights. And then there is no end to that kind of modeling. Okay, they are competing models almost on a weekly basis. We are actually getting sophisticated models. In fact, we keep joking within our community, saying that if you go to sleep tonight, and then tomorrow you wake up, you won't be surprised that you come out with a newer model because people are working on a 24-hour horizon. Fine. That is one of the kind of solutions. The most important solution to bridge this gap is to have qualified, trained manpower. So there is a kind of unwritten adage, within public sector banking in India that anybody can do anything and everything. No, unfortunately, when you talk about data science, it requires qualified specialists. And that is a highly specialized job, and everybody cannot contribute to that and cannot deliver wonders. If you want the people to deliver wonders, you please recruit specialists and then train them and retrain them. You cannot say that I trained you, sent for training 10 years ago, the next training will come only in the next birth. That cannot happen, unfortunately. So these are the two things. One is the manpower, another one is sophisticated algorithms. Then only we can bridge this yawning gap. And now we move further, come to the basic definition, I would say non-controversial definition of data mining. It is a non-trivial process of extracting useful, non-obvious and actionable knowledge from huge masses of data. Please look at these important keywords. First of all, you need to extract knowledge from data and never information from the data. If you extract information from data, that is called something else. That's not called data mining, but that's called information retrieval. Information retrieval is vastly different from data mining. They are poles apart. But having said that, this knowledge should have qualifiers. First and foremost qualifier is it should be useful, previously unknown, and actionable. When I say actionable, you can take business decisions. You can take scientific decisions based on that kind of knowledge. Now, immediately people may tend to conclude that data mining is a new discipline. No, fortunately, it is not a new discipline. It is actually a consortium of techniques ranging from statistics, operations research, databases, machine learning, and then new AI. So I deliberately added this word new AI just to let you know that new AI, what is called in the form of deep learning, is vastly different from the old AI people talked about 20 years ago. So now that we defined what is data mining and its constituents, we are at the lowest end of the pyramid, or you can say unification theory that I'm proposing here. I call this as umbrella. One umbrella already we created, which took disciplines like statistics, OR, databases, machine learning into its fold. As a consequence, what happened, that from these disciplines, or people from these disciplines stopped fighting. They started collaborating, cooperating, and competing with each other. Competing for what? Competing for coming out with newer and newer models, more and more efficient to solve the problem at hand, be it business problem, be it operational problem in the services sector. Now, having said that, now we have to throw another word called analytics. So that happened in Sarkar 2010. People talked about different forms of analytics, They said there are three fundamental types of analytics. Gartner defines as diagnostic analytics. Let us not clutter the picture already, okay? Three different types of analytics is succinct enough to capture the entire meaning. The more and more jargon you throw, the more and more confusion it entails. Therefore, we start with the descriptive analytics. Descriptive analytics is nothing but the first few slides what we have seen. It is nothing but descriptive statistics. And then if the number of dimensions is very large, then you have to take the help of OLAP, online analytical processing. In the marketing parlance, they call it as the vendors, they call it as business intelligence. Okay, so business intelligence is another word for OLAP tools. Primarily, what is done here is to depict the data in pictorial diagrams and get the information out of that. That is all. That's all. That more than that, it cannot do anything. It cannot let you make any predictions about the business problems. For that, a different cousin of analytics is reserved, which is known as predictive analytics. In this flavor of analytics, we are going to predict what is going to happen. So here you need disciplines like data mining, text mining, and web mining. One example could be predicting the future NPIs as soon as the 90-day period is over. Can we predict using the data that we have about the customer, or even the augmented data about the customer, very accurately which particular account is going to become NPA very soon? So that is only one example I gave. I can give a lot of examples. For example, we have got a bunch of loyal and profitable customers. What is the probability that a chunk of them are going to attrite to the competition in near future, in the next quarter? Already they would have dropped a lot of feelers. Are we taking cognizance of those feelers in the call center, in the social media, blah, 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 everywhere? So that is where, that is a tackle using predictive analytics. Okay. The third one is even more interesting. The first one talks about what is already present in the data in the pictorial diagrams. The second flavor lets you make predictions using, and there is an element of probability or randomness involved here. But the third thing says, okay, I heard everything, but you let me know what I should do from the bank side. So that is where it provides business insights. So, and then recommendations. So this is where a whole bunch of optimization techniques and then reinforcement learning, the newest entrant into the AI/ML regime, These are the two things that will solve the problem. And one example could be predicting ATM cash replenishment strategy. Very simple. All of us know that we should not put too low cash or to put too large amount of cash in the ATMs, because in both the case you are hit. If you put too less cash, then you actually attract customer wrath instead of customer delight. On the other hand, if you put too much cash, then idle cash does not earn interest. So the question here is, what is the optimal amount of cash that one should replenish in each of our ATM chain, number one, and how frequently we should replenish. So this essentially becomes an operational research problem or optimization problem. And from the Center of Excellence in Analytics, we solved this problem in two occasions. 2014, we collaborated with our collaborator, Professor Dick Vandenpoel from University of Ghent, a world authority in analytical CRM. We published a fantastic paper in European Journal of Operations Research. And that kind of thing can be implemented even in Indian scenario, let me tell you. Now, as recently as 2022, with our MTech students, we actually fine-tune those models with by incorporating deep learning architectures. So that is right now under review with a top-rated journal. We are hoping that it is going to be accepted pretty soon. And once that is there, we are going to announce that as well. Okay. So this is about analytics, which means we have taken one jump from statistics and operations research to data mining. And from data mining, we have taken another jump to analytics. Now the progression did not stop here, fortunately for us. Now, before we go into see the progression, let me just tell you what are the different tasks available in data mining. And these are the actually problems, business problems that can be collapsed into or formulated as one of these 5 tasks. First one is association rule mining. Second one is classification. Third one is clustering. Fourth one is forecasting or regression. Both are one and the same. And the fifth one is outlier detection. You give me any problem, business problem in banking, I will formulate this into one of these or a combination of these kind of tasks. Now, this is a kind of fantastic simplification. If somebody wants to learn this field, this one approach one has to follow. Otherwise, it becomes too much of an ocean. If you take this approach, task-based learning, then entire data mining, data science becomes very easy. So I'm just giving you here a pedagogical tip here. Okay, I was told that there are youngsters sitting in the audience. I would have loved to interact with them, had I been there physically, but unfortunately that's not possible. I look forward to meeting all of you maybe in next occasion whenever BOB invites me. So then, so there are a lot of use cases for association rule mining. Which are the products that go together? This helps you very much in campaigning. Okay, when you do cross sell, I'm going to talk about that in next slides. When you do cross-sell, basically, you need to do scientific cross-sell. I've been basically for a Center of Excellence in Analytics, this was not mentioned in the introduction. We trained close to 1,000 executives across Indian banking industry for the last 10 years when we set up the Center of Excellence in Analytics. And then BOB is also one of the participants there. The beauty of that training was, it was rigorously hands-on, First week went for giving the theoretical inputs to the participants. And in the second week, the seniors would have gone already. The actual youngsters who will be dirtying their hands with the data, they will be with us. And from morning 8 o'clock up to evening 7:30, I hope some of your people will remember this experience with us. We'll be actually working on your own data set and your own business problems. And then by the end of the second week, people would have already figured out how to model these using all these tools. And then at that time, we had tools like SAS Enterprise Miner and then IBM SPSS Modeler. We made sure that the participants learned inside out about these tools to the extent that is required to solve these business problems. And then we included all these 5 business problems. Okay. And then classification is about a lot of, fortunately, of the business problems within banking industry can be formulated as classification problems. Just to give you a feel of it, it could be churn modeling, fraud detection, NPA modeling, credit scoring, and then so on and so forth. Okay, customer propensity modeling, so on and so forth. And then clustering is very important if you want to move away from mass marketing to target marketing and personalized marketing. So that is where we have to cluster the similarly looking customers. And then forecasting regression has got a lot of application even in your treasury room. I reserve this for the next few slides where I'm going to talk about advanced use cases and so also the outlier detection. Now, I just take step aside and talk about some other things which will actually act like a glue between data science and AI/ML that completes my unification theory proposal, which I'm sure you will appreciate. I'm sure some of you are familiar with these some other tools like clustering, classification, etc. What I want to tell you here is there are a bunch of algorithms coming from various families. I repeat again, these algorithms, what you're looking as outside circles, they are coming from different families of statistics, ML, machine learning, pattern recognition, etc., even evolutionary computation. So these are all the competing methods and collaborating methods which will solve your clustering problem very efficiently. And this trend continues even for forecasting. Here the bunch got richer, palette got richer here because more and more algorithms have been suggested here for solving the same task of forecasting. Now, again here the same thread continues that the algorithms are coming from both statistics family as well as machine learning family. And then coming to classification, here again, as I mentioned, all those business problems can be solved using any of these any of these algorithms. Typically what we suggest is whatever your tool permits. Some of these tool algorithms may not be available in the tool. Therefore, that is conditioned by the richness of your tool, what you have currently in your bank. So whichever tool that you have purchased already and procured, using the algorithms that are present there, please work with all of them because there is no free lunch. The free lunch here means before actually applying all those methods, you don't have the luxury of predicting as to which algorithm will fit best for your data. That is where the fun of data science lies. The secrecy of data science lies. The suspense of data science lies. And that is where the thrill you have to enjoy. If you are able to predict that for all my business problems, one single algorithm works, then that is called master algorithm. Fortunately or unfortunately, such kind of master algorithm has not existed yet. And I'm sure it will not exist because of the complexity of the problems, number one, because of the complexity of the data sets, number two. Same thing continues for association rule mining, but here the picture is not so cluttered. Only two algorithms are there, and this is where a lot of scope for research is there. And we at our Center of Excellence in Analytics, we are actually developing a lot of algorithms in the evolutionary computing space, which are scalable algorithms. By saying scalable, the number of records increases, number of items in the bank. These two become not so scalable algorithms. We are actually developing these scalable algorithms here under Apache Spark for big data. Then talking about outlier detection algorithms. Here again, the same theme continues. We have got algorithms coming from probability and statistics on one hand, and machine learning on another hand, and our own evolutionary stuff on the third hand. So all of them again compete with each other. Then comes statistical learning. So these are all the variations that I showed you in the beginning itself. And then feature selection is a very important thing. Just because my core banking system allows me to populate 400 different fields, depending on the vendor that you have adopted for core banking, it doesn't necessarily mean that all those customer fields are equally important to solve a business problem. This is something that you have to take, always as a very important axiom. You require only a few of them, but who on earth or Mars will tell you that which are those fields that are important for a specific business problem. So this is where the feature selection strategies will let you know, hey, look, for solving this particular business problem, you don't require 100 fields or 100 customer attributes. You require only a fraction of them, maybe about 20 of them, and that are mathematically, statistically meaningful. And then business-wise, they are succinct. They will let you know to solve the problem very efficiently and then be done with it. So that is where feature selection is a very important aspect phase in the CRISP-DM parlance, which I'm going to talk about now. And here again, the same theme continues. We have algorithms coming from both the families. Now, having said this, we come to a stage where we are convinced that data science and AI/ML has got glue from 4 different dimensions. First and foremost, without data, data science cannot survive. Without data, AI/ML cannot thrive. Therefore, data science becomes first Fevicol, I call it. The second thing is models are coming from both statistical family as well as AI/ML family, and we have seen how collaborating feature that they have got. Therefore, model becomes your second Fevicol. And then compute is very much required for both the fields. Therefore, compute is becoming a third favicol. And all these things are useless, mundane mathematical exercise if you don't solve your business operational problems at the end of the day. Therefore, even though I'm qualified as a data scientist, both in my master's as well as PhD, and as well as AML guy, okay, but then I will say that if you cannot solve the business problems in the service industry, everything remains in the ivory towers of mathematical science, not useful to the society. Therefore, this becomes the biggest favicol, I call it, solving business problems and operational problems of the service industry. Therefore, what else you require to fuse them together? Therefore, I call them as unified subjects. Having said this, look at these umbrella diagrams. We started with the smallest umbrella called data mining, which had subjects like applied statistics at the bottom, or machine learning and databases. And then the radius of the umbrella got bigger when you went to analytics. Then all this got subsumed here under prescriptive analytics and then predictive analytics. And you have the descriptive analytics on one hand and prescriptive analytics on the other hand. A lot more subjects got added here. The radius of the umbrella got much bigger. Right now, we are talking about data science, where both data mining and analytics get subsumed here under social media analytics on one hand, big data analytics on another hand, and deep learning, we call it as new AI on the other hand. So this means this is the progression. This arrow says that of unification. So data science is the best and most unified theory nowadays we have got, where your AML is assumed for all the reasons that we have discussed so far. I hope the audience is convinced. Always I'm open to questions later on. But this is a kind of provocation I did. The same thing I do even in academia, because people talk about jargon, terminology, without actually getting into the business of developing the models, problems, for the services industry. Having said this, innumerable applications are there, not just in the service industry, also in scientific disciplines, even in government sector. The other day I was talking to CBDT, on some occasion. They're also using all these techniques for various purposes, for making the income tax compliance much more stringent and all that. And then a lot of applications in other fields as well. Now, these are the software tools that we have. Okay, wherever it is open source, it is mentioned. Otherwise, it is the commercial tool. So I'm sure you have got a couple of these tools available in your bank. If you remember, you have got the SAS Enterprise Miner. But then we also have to do some kind of, you can say, I will call this a miniature R&D exercises, research and development exercise within the bank also. Because I cite one important case study here. I was interacting with HDFC people about 3 years ago before the pandemic struck. Then, because they hosted our Chief Analytics Officer Forum, I was sure that one of the BOB person actually represented there. Okay. So that in 2019, December 5th, to be precise, at that time, I came to know that they have very few, at least a team of 2-3 people joined together to solve a simple research problem. And that research problem, once they get the results, then they actually make it, they put into practice. And then the top team gets convinced, the top management, and slowly puts into practice. So such kind of philosophy can actually percolate into even other banks. And why not our public sector banking also? Already you got analytical center of excellence in analytics in your bank. I hope it is working and thriving. So there you can inculcate this kind of stuff. And these are all the other tools which are in the open source domain. Okay.
Sir, this is Akshay here. We would just request if you can, we are short of time. We have another 10 minutes with us, sir.
I'm going to wrap up very quickly.
Okay, sir.
Thank you. Thank you. So now this is CRM, So let me talk about CRM. CRM is the analyzing marketing or customer databases, leveraging communication technologies and determining corporate practices and methods in order to maximize the lifetime value of customers. So here itself, we developed work together with the bankers, in 2011 itself, together with bankers and IT professionals. This is up for grabs for free download from IDRBT website, where we identified data is a very important pillar apart from people process technology, whenever somebody talks about CRM. So here, in order to maximize the lifetime value of each and every customer, See, people talk about only Pareto law, 20-80% rule, 80-20 rule, which means 20% of my customers give 80% of my profits. But we differ from that. We say that if you implement a CRM in totality and in entirety, you can make every customer profitable. Of course, unequally profitable. But we cannot say that no, certain customers are only there for social reasons. So CRM is also looked at from different perspective. Is the science of selling right product to right customer, right price, and right time. So now we have to ask a question to ourselves. Once we become a digital bank, are we actually targeting our campaigns to reach the same customers at the same life stage? So very often what happens is retired customers maybe in 90 years and maybe waiting for death, they get campaigns for housing loan, home loan, even education loan, and students they get retirement products. Such kind of things should not happen if we have a data warehouse and data lake. So that is what we said: right price and right time. So there are three types of CRM as well: operational CRM, analytical CRM, and collaborative CRM. I got fantastic advanced case studies here, use cases that you can actually implement in your bank. So this is a very important thing which talks about customer life cycle. Primarily, there are three stages in customer life cycle. We always start with acquisition of new customers. But in India, in PSU sector, I have seen that marketing optimization is not done properly. When I say that, at the beginning of the financial year, when certain funds are allocated for the three buckets, one is customer acquisition, customer retention, and customer profitability, most of the funds are getting allocated to customer acquisition. That is a wrong strategy. Because if only we can try to identify the future customer attriters, the churners, we can actually spend more money there and then try to sell more and more products there through scientific cross-sell and upsell. Then we can make them more profitable. We can actually address their grievances much better. And the process, when you acquire customers, you should not be mass marketing, You should be going for target marketing, even personalized marketing. So that is where all the three stages of customer life cycle will have business problems can be collapsed into data science algorithms. So these are all the list, I'm giving a bucket list of analytical CRM tasks. Each one of them is a business problem every bank is grappling with. And then these are operational or non-analytical CRM problems. We have done successfully ranking of the PSU banks based on productivity, profitability, and all that. The same thing can be done within BOB. Why don't you just rank your bank branches based on profitability, productivity, and efficiency? We have models, we can help you in that. And then a bunch of things, I will not go through each one of them. And then this is one thing, the crisp DM. When somebody talks about ML ops, I can only laugh at them because ML ops never starts with the business problem understanding. They are only worried about how do you develop an ML model and how do you deploy it in Kubernetes, etc., etc. No, you have to first talking about what kind of business problem you are talking about, where you want to solve it. So that is where they cannot wish away from crisp DM. Crisp DM is the de facto standard that is even more relevant even in the days of AML and data science. So this is what we advocate from our Center of Excellence in Analytics. Now talking about digital banking, one has to distinguish between digitization and digitalization. Digitization merely takes the, you can say, scans of the existing documents, loan documents, etc. On the other hand, digitalization has got all these kind of, you can say, dimensions. This has got a CRM and operational problem dimension. Even with the regulator, you can become digital. Internally, the bank should become digital with respect to correspondence from one department to another department. Technology plays a very important role. But unfortunately, I've seen many of the banks, when they declare themselves as digital, they place a lot of emphasis only on technology and the rest of the things are ignored. That is the reason I put this slide. Data is becoming a very important aspect of digital banking. Business process re-engineering is unfortunately ignored here. We have to ask a question to ourselves, whenever we become digital, or how customer friendly are we becoming? Is this question answered correctly, completely, succinctly? Is something that I'm worried about. And then no bank can become digital without data science in place. And of course, qualified manpower has to be there to make the bank digital. So this is something that we have actually encapsulated in a framework called digital. I'm going to talk about that. And data science can solve all these problems. Talking about security within the bank, there are different aspects of security, cyber security and all that. People conveniently ignore the data-driven approach to security. And this is where, again, we are playing. Recently, I'm very happy to let you know that we got a For the first time in the history of IDRBT, Canara, one PSU bank, Canara Bank actually is going to support us for our R&D activities for adversarial ML. I'll be very happy to hear such kind of things from other PSU banks also, including by BOB. So these are the advanced use cases. Very important use case I have been advocating, but I have not seen happening in India. For example, anybody walks to ATM for cash dispensation, all of us routinely get the same kind of ad, very boring ad. My proposal is as follows. The moment I put my ATM card inside the ATM machine, in real time, it should pick up my profile from the data lake or data warehouse, and the advertisement that is populated there. And this differs from customer to customer because each and every customer profile is different. And there are different dimensions to this. Data quality dimension is there. If you have got data governance already in place, half the problem is solved. With respect to data science, you have to run association rule mining in real time. Edge intelligence may be needed here. BPR is very much required because you have to link all the ATM transactions to your data warehouse or data lake in real time. People skills, I already told you, specialists are required for this. Technology is already there. Therefore, this is some worth attempting within the bank as a kind of pilot study. Once it is successful, you can actually implement the PAN bank, and then ATM daily cash withdrawal forecasting. I'm not sure how it is done, whether even if it is outsourced, you can advocate to them, hey, look, you have to follow this methodology. Ranking branches already mentioned this. Forex and interest rate forecasting using advanced data science AML methods for better arbitrage. Data science for SOC. I've been talking to several CISOs. They talk everything else except the application of data science. And that makes me worried because increasingly, more and more data is getting sprinkled here and there, getting generated, and we are conveniently ignoring the data within the SOC. And we depend on some tools. Why don't we run some pilot studies within the bank? Adversarial machine learning, already I mentioned to you. If we actually implemented AI models to some extent in the bank, I'm very happy, but please be aware that they can also be attacked. And this is where we are running a project for Canara Bank right now. And then explainable AI. If you just fit AML models for solving some business problems within the bank, that is not sufficient because you have to make sure that the models actually explain what kind of decision that they have taken, number one, and how they have taken, number two. Because otherwise, some customers, without their fault, will be kind of ignored and then biased against, So this is the new thing that is coming up now, and service industries should grab it up immediately. And for some reason, if your data is in your private cloud and you want to protect it, then fully homomorphic encryption should be done, even for analytical CRM and operational CRM problems. And finally, then the third case study is using augmented data, which is in the form of social data and user log data, call center data, newspaper data. You can solve all the bunch of business problems that I mentioned in the previous slides much more efficiently because you will be getting 360-degree view of the customer, which is the holy grail of CRM. And then you cannot forget when you are implementing all these AML models, advanced stuff, the FEAT-G principles, fairness, ethics, accountability, transparency, and green. You have to make your AML models green. They should not be guzzling a lot of energy, which is equivalent to the carbon footprint left by aeroplanes, for example, which is a very important case study already there in the internet. Okay, we have to be very careful when we apply all these deep learning models. There is a trade-off, how much of carbon footprint we are leaving while solving the problem more and more efficiently. And AML for optimal wealth management. I've seen in the A for banking that we have released a booklet, the framework. I was one of the co-authors, and then Bank of Baroda also actually supplemented their case study there. I've seen you are also doing good stuff there in wealth management. I want to know how optimally you are doing using AML strategies, which is where again I can advise. These are the 10 critical success factors that one has to keep in mind. You have to always come with business problems. Everything else is secondary, in my opinion. If there is no business problems to solve, that means your bank is fantastic. Get executive commitment, pick the right team, qualified, trained manpower, build a strong change management plan because some people will be resistant to change. Prioritize users, that means user departments, and then you have to involve them right from the word go. Analyze processes and redesign as necessary. I'm referring to BPR. And you cannot boil the ocean. You have to take a phased approach. One important suggestion here could be you can rank your branches in the descending order of data quality. Pick up the top 100 branches with respect to super data quality. Relatively speaking, not absolutely. Implement all these things in those 100 branches, then only go for other branches in a phased approach. And then measure the progress with tangible goals. Because these tangible goals, for example, I want to reduce my customer churn from 5%, let's say, to 4% in the next financial year. That's a tangible goal. I want to reduce my NPAs from 5% to, let us say, 4.5% next quarter or next, say, 2 quarters. So such kind, and then turnaround time for, let us say, issuings of demand drafts. Currently, 10 minutes are consumed in the branches. Can I make it 5 minutes? Lot of BPR is required here. Provide adequate training and support. So these are the 10 important critical success factors.
Hello.
And these are the frameworks that we co-authored here. I'm closing. I'm closing. Last few slides. So you can download them free of cost from our website, and then a lot of stuff is there for using in the bank. So this is where I stop. I'm open to questions. Thank you so much for the opportunity.
Thank you very much, sir.
I'll be very happy to take some questions.
Yes, sir, and we are sorry to interrupt. Because of the paucity of time, we had to interrupt in between. So if any participant has any questions, they can put forth. Mike.
Hello, sir. Nitesh here. Sir, as a banker, we are not that tech savvy. So my question is regarding if a model is developed using the algorithms and tools that are provided from a company or from your IIT Powai collaboration. So what are the ways using which we can run the day-to-day operations or modify the logic by our own without going deep into the technical aspect?
Yeah, very good question. First of all, small clarification. You mentioned IIT Powai. Can you please give the mic to him? Please give the mic to him. He said IIT Powai. So we are IDRBT. Maybe just for correction. I am from IDRBT. I am not from IIT Bombay.
Yeah, sir. Sorry, by mistake that I mentioned.
No problem. No problem. So now let me answer that question. See, once the training takes place, there are multiple levels of data scientists. So these called self-service analytics, you know. So once the maturity occurs and grows in the bank, some of the things, even in a mundane way, you can actually run the models and perform your tasks even at the branch level. I'm going to the branch level, not at the corporate office. That can be done. But then, when there is a necessity to actually build the models, that happens at the corporate office. Please try to appreciate that fact. And when that upgradation or rebuilding of the model happens, is a business decision taken by the close-knit team working in the corporate office. But then for day-to-day activities, for running solving all these business problems, even at the branch level, you'll be running a model, you know. You don't have to know the intricacies of the model. But then you have to give the feedback to the team. So that is called self-service analytics. That is very much in place. So the model will be deployed in your team, in your branch, and then you can be running, you know, seamlessly without any issue. That requires only minimal training to how to run the model, but you will not be tweaking the parameters of the model. You will not be trained to run the model, develop the model, so on and so forth. You will be trained only to run the model. I hope that answers your question. You should not be intimidated, you know, by whatever I said. There are different layers of training that should be provided, but the decision making at the branch level can also happen through data science and AML. That is what I'm trying to tell you.
Thank you, sir. Sir, it would be helpful if you could just share your mail ID so that participants could get back to you later if there are any queries.
Yeah, I already showed that in the last slide. In a hurry, I had to close it. Anyway, So okay, you can note down V Ravi, V for victory.
V Ravi.
Yes, V Ravi at the rate IDRBT.
IITB? ID.
No, ERBT. Institute for Development and Research in Banking Technology. I for India, D for
Yes,
Delhi.
sir.
R for Rohtak. B for Bombay. T for Technology.
Yes, sir.
IDRBT dot AC
Yes, sir.
dot IN. India dot IN. I repeat, V Ravi at the rate IDRBT dot AC dot IN. Let me just type it here. I'm typing in the chat. Maybe if you can project.
Yes, sir. It's a vravi@idrbt.ac.in.
All smart letters.
So participants, if anyone has query, you can surely mail it over here. So that was Professor Ravi Vadlamani. Please give big hands to Mr. Vadlamani. Sir, thank you very much for joining us. And hopefully, as you said, we hope to see you soon physically amongst the audience. Thank you very much.
Definitely. Thank you once again, Akhil Andaji, for having invited me here. It's a wonderful opportunity, even though I missed visiting there physically. Okay, but we'll definitely meet very soon. Thank you so much once again.
Thank you, sir. So we are almost at the end of the Bob World Digital Conclave 2022 at Betul Hall. You have been an amazing audience. Yesterday and today, you all have come over here and witnessed variety of topics, a variety of speakers. It has been a great experience, and I hope it's same for you, because management has arranged for a gamut of speakers who were, executives from top-notch enterprises who have come in over here and delivered speeches, and also, variety of discussions happened over here on the topics which are quite futuristic and which we've just heard as a jargon and which have been demystified and explained over here. So thanks to all who have organized this, and also thank you all for being present over here. Lastly, this is Akshay Patil. I'm signing off from here. Thank you for being over here, and hope you have all enjoyed and Goa has been good to you. And lastly, as they say in Konkani, Dev Bare Karo, have a safe trip, safe journey. But I would request all of you all to please move to Grand Ballroom, because over there we'll be having open house discussion going on.